Hello and welcome to the Scaling Europe show. I'm Seb Johnson, live here in Helsinki at SLUSH, which is an amazing event. I'm going to be streaming and interviewing guests for the next 2 days. First up, we've got founders from Harvey, Kleiner Perkins, OpenAI's on. We've got an amazing roster of guests over the next 2 days, so stay tuned. I also want to say a massive shout out to my sponsors, Harmonic and Databricks, who have enabled me to come out here and interview these guests for the 2 days. So a massive shout out to them. Definitely check them out. Now we're going to head over to our first guest, Gabe, the co-founder and president of Harvey, and Ilya, who's the partner at Kleiner Perkins, who invested in Harvey. So let's go over to them now. Hello and welcome to the Scaling Europe show. I'm Seb Johnson. We are here at SLUSH in Helsinki and we have got two amazing guests in front of us here. We've got Gabe and Ilya. Gabe, co-founder, president of Harvey. Doesn't really need an introduction. You've had an absolutely phenomenal year. It's insane to believe that you're only 3 years old. One of the leading AI startups, if not the leading AI startup in legal tech, and Ilya, partner at Kleiner Perkins, who of course invested in Harvey. Now, before we talk about the investment in Harvey and tech more generally, how did you two get to know each other? How did that investment come about?
Yeah, we actually truly met at the Series B, which was the round that we wound up leading, where I wound up investing. And in fact, I think for the first time we really met when you guys came in to not pitch us at the office. It was a not pitch. There was no deck. It was mostly, I'd say, vibes.
Mostly vibes.
But the vibes were good.
Yeah.
But we, of course, knew about Harvey for a very long time. We'd known about Gabe and Winston, about the growth of the company, and they'd been on our radar for a very long time. In fact, we were like a day late for the Series A, I think. So that's always been something that we've talked about.
Yeah, and I was going to say, right after the not pitch that we had, I think maybe 3 hours later, you called us and said, we're in. And I think that was kind of when we knew we would work super well together, because Winston and I make decisions super quickly and wanted investors that did the same.
And how important is the vibe that you have with an investor before kind of letting them in?
I think super important, and more than maybe vibe, I think Winston and I, all of the early hires, leadership hires, very quickly we've been able to just within the first early conversations, you just know if you're going to work well with something. And I think we had the same with Ilya and our other investors. So I think that's super important. You can kind of just tell.
Yeah. And what about Harvey kind of, made you so quick and eager to get involved?
Well, Harvey as a company had been on our radar for a very long time because if you think about applications of AI to work more broadly, which is something that we think about quite a bit and we thought about as kind of our entry point to investing, just given the history of having invested in companies like Slack and Rippling and Intercom. The idea that you would have a co-pilot or some kind of experience, this is in 2023, for every professional in their life made a ton of sense. And if you sort of looked at the list of those types of things, it would be software engineering, it would be doctors, and it would be lawyers and professional services. So the concept of having something like Harvey made a ton of sense. And specifically, the reason it makes sense is that the work is incredibly difficult, it's incredibly nuanced, it's incredibly subjective, it's got a really interesting market structure to it. And so the Harvey approach and the way that they really focused on the market really resonated with us on those dimensions.
Super interesting. And the Kleiner Perkins seems to have a really strong thesis about vertical AI. Like you mentioned, you made investments into Harvey, but also AI tools for doctors, for engineers. Are there any other professions that you're looking at right now that you think are very ripe for that type of model, be it accounting or teaching or other kind of similar professions?
I think the quick answer is really it's going to be every profession, and every one of us is going to have, if I think about my kids, they'll have co-pilots, right? They'll have a friend, they'll have a tutor, they'll have an educator. So I think it's going to be pervasive. The real question then becomes, how do you build something that is significant and standalone? And how do you really get it to work in a way that creates the value, right? And I think that's been actually really a function of development of models and performance of models and development of product around that. But truly every role, like every, professional services, legal services, doctors, lawyers, nurses, services companies, customer support agents, sales folks, and we have companies kind of doing things for all those categories, but it's really everyone.
Yeah, and nothing's off the table, I guess.
Nothing's off the table. model, and as model performance improves, as the costs of infrastructure go down, you can reach broader and broader audiences with these products.
Yeah. And can I ask Gabe, we talk about models improving, costs coming down. How does that change the core product at Harvey? How does that change the product roadmap? How do you think about it when models get released?
I think this has been something from when we started the company. We always had the bet that the models are going to get much better than they are even today. They're going to get much cheaper. And so really thinking about what is the value that you're providing. And when we think about the law firms we sell to and the enterprises we sell to, at the end of the day, if you make every associate a bit more efficient, this doesn't actually improve necessarily the business of the law firm. And so we really think about how do we make these law firms more profitable, not just every individual employee a bit smarter. And same with these enterprises with massive legal functions. How do we help them get better, faster, cheaper legal services? And I think at scale for these enterprise companies, it really is the agents, the models are part of it, but it is all of the product, the governance, the process management, how you work with the humans in those organizations. And so that's a lot of the problems we're starting to solve.
And how did you work with those very initial lawyers? I mean, you first started Harvey and you were building the technology for what is a quite traditional industry. How did you sit alongside, work for and build for lawyers?
Yeah, I think a lot of the intuition came from, so my co-founder Winston was a lawyer, and so it was just me and him sitting down using these models. He had been an associate at O'Melveny, which is one of the top litigation firms, and just going through the work that he does and figuring out here's what the models can do, here's what they can't do, here's all the product you need to build around the models. And then as we scaled up and started working with large law firms, it was here's what teams of lawyers need to complete these complex projects, here's what admins need to manage their entire workforce and these kind of agents they're deploying.
So very close to the user experience and yeah, that classic product iteration, staying close to your customers. I read that Harvey's first customer was actually a UK customer. Can you touch a bit on kind of what happened there? How did that come about?
Yeah, so one of our early investors, Sarah Guo, introduced us to an ex-A&O partner who was doing an MBA at Stanford. And when we pitched him the product, he said, you need to meet David Wakeling, who was a senior partner at A&O, but also ran kind of the technology side of the law firm. And when we showed him the initial product, he was like, this is what I've been looking for in legal tech for the past 10, 20 years. And full credit to him, he recognized what this was going to become. And we went very quickly from an initial pilot of 30 people to a firm-wide rollout of 3,000 lawyers really early on. And I think that was the moment where we were like, okay, there's something very big here.
That's amazing. That's hearing somebody say this is what I've been waiting for 10 years is like the dream product feedback. And how are you thinking more broadly about European expansion, signing more and more UK European clients?
Yeah, and so our second customer after them was PwC Europe. And so I think from the start we have been European focused and then international, so we're in 56 countries now, and so I think a lot of the focus is how do you localize the product, so how do we get case law in every country. Every country's legal system is different, the way they practice is different, and so really thinking about beyond just different languages, how we make the product work in all these different countries. And then I think a lot of the value for these large enterprises that operate in all these different countries, you need to work with a network of law firms. Yeah. A lot of these law firms have kind of sister firms or partner firms in other countries, and so starting to think about how we can tackle all these problems globally.
Yeah, that's a really interesting go-to-market motion. If you can sign one office in London who's got offices all over the world, it's a really nice entry point. I also want to talk about your background and your experience, because you were at DeepMind, right? DeepMind is, one of our UK's, almost like proudest achievements. The AI before AI was really big. How formative was your experience at DeepMind in the approach that you took to building Harvey?
I think probably the biggest thing I took away from it is even when we got early access to GPT-4, we were already thinking about agents. So I had done a lot of reinforcement learning stuff at DeepMind, and when you saw GPT-4, it was very clear you're going to connect these to tools. You're going to be able to give it these very high-level tasks like go do a diligence, and the models will be able to just figure out how to do that. And so we've been thinking a lot about how do we build all of the product and infrastructure around these models so we can do this more complicated RL stuff. And then I think also just having spent that time in Europe, the first startup that I actually tried to start was here in Europe.
Oh, amazing.
And I think a lot of the network from that as well is super helpful.
Yeah, amazing. And Amelia, how are you and Kleiner Perkins thinking about Europe? I mean, we touched on the very, almost like, AI verticalized, found the application layer of AI that Kleiner Perkins is going big on. That's an area that we're really over-indexing on in Europe. But we're investing a lot of money in the application in Europe. How are you thinking about the European tech ecosystem?
Well, first and foremost, I think Europe has incredible talent, right? I think, and Europe has a history of incredible companies that have been built here. And so we're quite excited about Europe as a birthplace of great companies. And we've got, Harvey's expanding in Europe. We have Synthesia, which has also got European presence. So we have actually quite a few companies where either the founders came from Europe or they're kind of expanding into Europe. I used to live in Europe too when I was growing up, so it was fun to be back.
Yeah.
But I think, so our view is there's incredible talent, and our goal is to find that talent at the right time and help that talent grow. And typically for us, that means having the company have some presence in North America, in the US, where we can be hands-on helpful.
Yeah.
But I think you've got incredible application level talent, but you also have incredible research labs that'll eventually produce more applied AI, more infrastructure AI type of opportunities. So yeah, quite bullish and excited to be here.
And can I ask, very open, honest, no polite answers. The media company that I've built is all about taking European tech to the next level. What are we doing in Europe that is wrong or bad, or that people in America are looking at and thinking, what are you doing?
I don't think there's anything. So first, I don't think there's anything. There are some things that make it harder to build companies here,
absolutely,
right? And I have investments in companies that are GmbH structures, and there's governance, and there's all sorts of things. Equity is not thought of the same here as it is in the States. So kind of incentives. But fundamentally, I think the biggest thing is having a crop of incredible entrepreneurs who kind of recycle back into the system. So I think in some ways it's a little bit of a waiting game, or it's a game of founders coming over to the US where when you need to hire your star-studded CTO, VP of engineering, chief people officer, chief operating officer, chief revenue officer, just the pool of those people is right there.
Yeah.
And you have other founders that you can kind of bounce ideas. That community, I think, is a little more dense right now in the States. And so I think you kind of want to, over time, recreate that kind of community in Europe.
Yeah.
And I think that's really what you need, because you just need the right people to build these incredible companies.
Yeah, absolutely. We need more people in tech generally, and more people who are willing to spend their time, taking the path that you took, and going deep on the research level and then spinning it out into a business. How do you think about global talent? One of the things that I speak to a lot about with European founders is how a lot of the product engineering talent is great in Europe and super cheap compared to the US, and San Francisco's got amazing talent but it's super expensive. A global company in 50 plus countries, how do you think about talent, where to hire people, where to base them?
Yeah. I think we're still at the stage where for us it's just how do we get the best people, and I think you find them everywhere in the world. So we just recently hired one of our engineering leaders in Toronto who had worked with our CTO Siva at Twitter, and he's phenomenal, and it was just worth having an office there to get him on board. And then we are starting to hire folks in London, and so I think there's a bunch of, kind of like Ilya said, a bunch of good research talent, folks from DeepMind, and just more broadly, I think there's starting to be a lot more technical talent. And then we're also opening an office in India, and so I think we're trying to find more and more talent out of SF, especially as we scale, but I think you can find it everywhere.
Yeah, amazing, and it makes total sense. I want to finish with one question each, and I'm going to ask Gabe a slightly worse question in the sense, and you're going to have like the opposite question. What has been the hardest or lowest point during your entrepreneurial career where you felt like you're up against a brick wall and you don't know how you're going to get through it?
Yeah, that's a good question. I think it's definitely, to me, the challenge has just been the rate at which we're scaling. And so I think for me, the hardest part was my background is AI research. And so I spent 10 years kind of in a lab by myself, without deadlines, without meetings, without people, just thinking about AI. And I think the transition from that to the past 3 years of scaling to we're now over 400 people, over 1,000 customers. Just that shift, I'm like pretty introverted, and so I think just learning to deal with that, learning to operate in this new way, I think that's been really hard, but I think having folks like Ilya, my co-founder, kind of the team we've built has helped, but there's been times where I think that's just
that's a really interesting
really
insight. Yeah, I mean, there's not that journey from sort of researcher, super technical to star-studded co-founder is, it's a really interesting journey. And Ilya, for you, you've got an amazing track record. You've backed companies like Rippling, Intercom, and of course Harvey. What has been the defining deal or moment of your career that you look back on with the most joy or most pride?
Besides Harvey. It's obviously Harvey.
Can't say Harvey.
I would say the best might yet be still to come. I think we live in such a, if you think about the moment we live in today, it's bigger than the internet. It's more incredible. It's stronger technology. It's going to be more leveraged across pretty much every facet of what we as humans do, obviously from the day-to-day to through the research and discovery of new things. So I think, honestly, the most exciting thing is like the stuff that will be built in the next 5 to 10 years, I think is going to be more mind-blowing than anything that's been built today. But of course, I expect for Harvey to be one of those next in line, Magnificent Seven type of companies, because it's such an opportunity. But I think that's what keeps me kind of going and excited.
No, that's an amazing answer. I've asked a lot of, I'm always looking to see the differences between the European ecosystem and the American ecosystem to see how can we replicate the success that so many American tech companies have. And I think that mindset that you've kind of portrayed there of looking forward and being super optimistic and ambitious kind of really captures the spirit that you have in the US. And lots of investors that I talk to are more backwards looking, and they talk about the deals that have happened. But I think that's an amazing answer that really captures a lot of the mindset difference and the ambition difference that we have. Well, look, thank you so much for joining me. It's been an absolutely pleasure to chat to you both, and best of luck with your speaking slot.
Thank you.
Thanks so much for having us.
Hello and welcome back. I'm now here with Laura and Mark from OpenAI. You both have some of the coolest job titles I know, head of startups. Can you just touch a bit on that before we get into OpenAI, tech, Europe, all of that good stuff? What is it that you do? What does your job title mean?
Yeah, our focus is supporting all the startups that are building in AI right now. So our team every day is just working with founders who are using OpenAI's models, building really interesting products. We also do a lot of work in the VC ecosystem, so supporting VCs that are making investments in these new companies. We've built a global team now supporting startups. I'm based in SF, Laura's based in London, we are a bunch of founders, operators, folks who really just love working with startups.
And I love startups, I love the energy, I love the vibe. What are some of the best things about working with startups from across the world?
I think particularly in this era, startups are just operating at the bleeding edge, and we are pushing the frontier on the models. That's our focus, but I think working with startups that are taking those, putting them into really exciting products and kind of pushing the boundaries of what's possible with AI, we learn a lot from the startups actually, and it's fuel for our research team to say, okay, how are the most innovative companies in legal AI or using them in coding and other areas, what are they seeing and where are there gaps that we need to go do more research against and continue to co-develop to push the next frontier. That's the most exciting part.
And so you work closely with them to test your own product, I guess. How do you work with them when you have a new model, you've pushed the frontier out? How do you work with startups to help them kind of adapt and adopt the new technology that you've built?
So we actually bring startups in while we're building the model. So it's a very close partnership where we may put an alpha snapshot out and say, hey, here's a bunch of startups that we're working with across different domains. Please test it and let us know feedback. We think it's better on these 5-6 dimensions, but we want to get actual feedback, maybe evals, and say, is it actually good enough to ship? With GPT-5 as an example and 5.1, we did that with a bunch of startups and produced subsequent snapshots based directly on startup feedback before shipping the final product. So a lot of it happens before we ship. And then afterward, I think one of the real value of our team is trying to figure out what are the best practices using the current models, and how can we make sure every startup has those so that they get the most performance out of what we're shipping.
And I imagine that if I was a startup watching this, I'd be like, how do I get to work with OpenAI while they're developing their models? How do you choose who to work with? What kind of startups do you work with?
So we've set up our work really to have resources for all startups,
Yep.
and we tend to go deeper when we see signal. So a company is breaking out with a lot of traction, or through our VC partnerships, if one of the VCs says, hey, we're placing a bigger bet on this company because we see a lot of potential, we'll respond to that and lean in as well. So we're building more and more capacity with our team. We want to work with a lot more startups. I've been with OpenAI 2 years, and we started with just a really tiny team. It was me and 2 people. Now we have a global team, and it's really exciting to be able to do more and be more embedded in a lot more of the ecosystem.
Amazing. And a question for you, Laura, is, you're focused in EMEA. We have a very different and unique tech ecosystem in many ways to other countries. The best one. Absolutely. We're going big on the application layer.
Yeah.
What other kind of insights or trends do you kind of get to see working in kind of your unique position as, the leading model provider in the world, partnering with amazing European startups here? What kind of insights did that give you?
I think it's incredible. First of all, I think I have the best job in the world. I get to work with an incredible team internally at OpenAI that I learn a lot from, but truly brings the founder mentality within our team. So Mark has created a team, and we have done the same thing here in Europe, where most of us have come from either a startup founder or investor background ourselves. So we're not here to be a commercial partner. We're here to be a true partner in every sense of the word, from raising, from the moment we hear people are starting to establish their companies, we're thought partners, all the way to truly being very deeply embedded on the engineering side. So what I get super excited about in Europe today is that we have incredibly technical founders who are looking at problems that are very global in nature, and they're trying to bring, or actively are bringing, solutions to both enterprises across multiple industries, whether that is legal tech to construction tech to food tech to everything in between. And they're doing it with a technology and cultural awareness first. So when we see founders here that are understanding the differences between different markets and different languages and different needs, that are going global from day one because they want to service not just the city or the country they're in, but the problem that they're solving in its global nature, I think it's a real joy and gratifying job that we have, that we're a part of making sure that these problems are getting solved and these new use cases are coming to market. And as Mark said, we work with these companies to make sure that our applied engineering teams can support in making sure that the models are continuously bringing in the capabilities so that these problems can be solved every day.
And one of the big concerns or risks that we always hear is that OpenAI is going to eat everything, right? It's developing the models, but then it's also going to go on top and eat everything in the application layer. Do you hear that risk or concerns from founders that you speak to?
Do you want to answer this?
Sure. We definitely hear it. I think the risks tend to be a little bit overblown, to be honest. We operate in some areas, and we work with many startups who also operate in those areas. And in some cases, like coding, for example, like we have a Codex product, we work with all the top coding AI startups, and we have very deep relationships with them. And I think it's a really big market where there's going to be multiple successful companies over time. And so I think our positioning as a team, like we exist really to support startups, full stop, building and being successful using our platform, regardless of whatever products we have, from first party, from OpenAI. So that's a pretty deep commitment. And we try to be very, very supportive and helpful and pull out all the stops so they can grow and hopefully accelerate their growth as fast as they can. Working with us.
And I think I kind of agree on the overstatement of the risk. I think what we're seeing is these vertical players are really, they've got like a context layer that I think is much harder for kind of model providers to get as well. So people like Fixer AI, founded by people who used to run an EA agency, now building AI agencies. I just spoke to Harvey Gabe, and being co-founded with an ex-lawyer. It's about building that context and building that in. Are there startups that you meet and you think maybe you should be focusing on fine-tuning a model, or maybe even building your own specialized model? How does that work from your perspective?
Yeah, we actually work a lot with startups who fine tune. It's usually there has to be a really good fit between the problem they're trying to solve and is fine tuning a good fit for that. But for example, reinforcement fine tuning is something we built into our API that allows you to fine tune basically expert reasoning on top of one of our reasoning models. So maybe it's a legal task where it requires how an expert lawyer might do a review or a classification task or case citation. Like you can actually use fine tuning to make our models better on that dimension. So it's not a fit for everyone. We don't recommend it as like the first thing to go try, but where it makes sense, we can lean in and provide a lot of support on that.
Got it. I also want to talk more broadly about European tech generally, right? We're here in Helsinki. There's a real moment around European tech. What do you think are some of the key challenges that European tech has today? Is it around, we hear a lot about sovereignty, resilience, we hear a lot about compute, we hear a lot about talent, we hear a lot about capital. From your perspective as someone who is right at the center of the European tech ecosystem, what do you think the key challenges are?
So actually, to the points you just made, I think the talent we have here in Europe is exceptional. We have extremely strong technical talent in every corner. So from Spain to Lithuania, from like Misa to Sintra, we see companies that are truly exceptional. And I often say this, that in Europe, we not only have great technical talent, but we have the educational system to create the ecosystem for that. So in Europe, we have more STEM graduates than the US or China. So we definitely have the ecosystem for it. You have to marry technical talent with go-to-market, with funding, and with ecosystem plays. So in my opinion, events like SLUSH are one of the best things for people to be in because it brings the ecosystem together, both the US and Europe, but across Europe as well. Investors, founders, potential customers, developers, and we just need to be doing that more because as incredible as our ecosystem is, by definition, because we have multiple hubs, there is a bit of a fragmentation. So I see fantastic uptake within hubs of people learning from each other, whether it's hackathons or alumni from successful companies and operators starting new companies and then investor networks. But that whatever you do has to be amplified across the multiple different networks, and then you need to be solving for different languages or different cultural, legal frameworks that you need to be operating in. However, I always say your challenge is your moat, and again, being able to navigate the differences of European markets and all the challenges that brings means that you're building for abstraction, for simplification, and for faster uptake and go-to-market and adoption, which is a lot easier, in my opinion, to figure how to go to market across Europe and the US than to start in the US, be successful, and then have to retrofit everything to the very fragmented European market. So in that sense, always find the silver lining and make your challenge your opportunity.
Yeah, it's a great point. It's that European mentality of going global from day one.
Absolutely.
Whereas US companies just go US because the US market is so massive, and then it becomes a bit of an add-on, the international expansion.
And I think this is the great thing about the work that we do, that our models, first of all, we're a company that ships a lot and often.
Yeah.
We are continuously decreasing our prices, and we're doing everything we can to take all the feedback that founders are giving. So if there's one advice I always give to founders is use us to your advantage, give us feedback, tell us what you need, what your use cases are, where you're reaching the limits, as Mark was saying, we're at the bleeding edge. So where do you reach the limit of what the models can do for you so that we can put it on the roadmap and start building it. So as long as you're using all of that to your advantage and you're working with us, we can start looking at what going global from day one is, as well as help you go faster. So, and I think we talk about this often, because of AI, because of the tools that are now available, the sprints are faster, idea to production, the cycle has shortened from weeks to days. The ability to testing with customers is a lot better and faster, and it's also the developers are better, but the tools are better. So your team, both the people in your team, but also the teammates that you have through Codex and other tools that we have brought to market, have made it possible to a lot faster and in a lot cheaper and cost-efficient way, actually, with a lower risk, get things to market in a better way.
Amazing. And can we touch a bit on the points around things like data sovereignty, European regulation? Is that something that startups are asking a lot of questions about? Are they concerned about, the data sovereignty argument, keeping the data safe and secure within Europe? Are they concerned about the EU AI Act? And what role does OpenAI play in kind of helping startups navigate that?
So a lot of startups are asking to have EU data residency. We offer that very happily. So if anyone wants EU data residency, send us an email. We'll very happily help you get that. It's a very seamless process. And we're always happy to respond to it. OpenAI also was the first large company to sign the EU COP, I believe. So Code of Conduct.
Yeah.
So we're very happy to work with regulators. It's a new technology. We understand there has to be policy there, and we're there to support building for every company with whatever data they have in whatever industry in the best way possible. We also have a BAA for healthcare companies that want to sign for HIPAA and other PIH. So we're here to work with every startup, no matter what it is that they're building. And if we don't have something, we will build it, because we're always here to build what our customers want.
Amazing. Look, I want to ask the same question, last question of each of you. OpenAI is an absolute rocket ship, right? It's like people talk about generational, people talk about generational companies. OpenAI is this generation's generational company. If you look at revenue growth, monthly active users, revenue, valuation, everything. What is the best thing that you enjoy about your job working at this rocket ship? And then I want to ask, what's the worst thing and the hardest thing?
Well, they might be the same thing, which is the speed of this place is insane. I think OpenAI prides itself on being very talent dense and just being able to attract some of the smartest, most capable people in the world. You see this in our research and engineering and product teams, but it's true across OpenAI. I think the single orientation around the company is around speed. And so all these very highly talented, self-motivated people moving as fast as possible. I remember seeing it from the outside, which was kind of the thing that really inspired me to want to work here, was just how fast the company shipped new models and new capabilities and reinvented over and over again in such a short period of time.
Yeah.
Seeing that internally is both the best thing, because it feels like there's just energy and momentum and you see the impact. The challenge is you have to keep up. so that's our daily challenge.
Relentless, I imagine, yeah. What about you, Laura?
Mark is one of the reasons why I'm here. I think it is extremely rare to have such an incredible group of colleagues that always make you want to be the best version of you. So I always say we hire the best, we make them work the hardest they ever will, and we make them the best versions of themselves. And I say that with me being the prime example of, I have never wanted to be as good and as dedicated to what I do, because I want to be as good as my colleagues are. Yeah. And every single person in my team is just here because they truly, truly care about not the work in a general sense or in an abstract sense, but in a very real sense of, do we have an impact in the world? Are we actually helping startups build things that are helping people every day? Whether it is, again, the restaurant making it easier for them to order food and people to have safe food every day and at their tables, to being able to code and bring ideas to life. And we all have that mentality of, it is a responsibility we have to the world to do everything we can to make it possible for this new technology to be brought to people. And I never feel pressure, but I always feel responsibility that is very much from the top down and from every single colleague that I have. I don't think there's anything bad or challenging per se, but yes, speed is one thing. The only thing is, sometimes I wish that, again, we were all able to just spend all our time in the market every single day. But we also do have to be in the office sometimes and do the work. So,
Amazing. Well, look, thank you so much for joining me. It's been great to have you, and we'll keep watching OpenAI fly.
Thank you.
Thank you. Thank you for tuning in. Those are some great guests. We've got some more great guests coming up. And in the meantime, I want to give a quick shout out to our sponsors. Did you know that 90% of AI models never make it to production due to data issues? The average enterprise customer has 5 data warehouse problems. If that's an issue that you can relate to, get in touch with Databricks. They are an amazing partner. And Harmonic, an amazing partner of Scaling Europe. They are sponsoring the live show here at SLUSH. They are the leading tool for VCs to source, select, and invest in the next generation of amazing companies. So please check them out and tune in. Welcome back. We are here still, SLUSH Helsinki. We're having a good time. I'm here with Tom. Tom is back on the show. We know well, partner at Atomico, author of the State of European Tech Report. You've just released it. You've just been on the main stage talking about it. How was it?
It's always epic to be at SLUSH. Is this your first SLUSH?
My first SLUSH.
First SLUSH,
and so far, I'm loving it. It's absolutely crazy.
I was just saying it's my 11th now. So 11th year of doing this report. It felt bigger on stage.
Yeah.
It actually felt more important than ever, though, to be up there and share what we had to share. We can get into it if you like.
Yeah, please. Like one or two. What are the headlines? What are the key trends or insights?
So we said this is a crossroads moment for Europe. On the one hand, we've had 12 amazing months. Like what comes through really clearly from the survey that we did. So we did this huge survey, right?
Yeah.
Thousands of people share their voice basically with us, and it's really clear that ambition stepped up, optimism is rising, execution's accelerating. From a numbers perspective, we've added $1 trillion in ecosystem value in a pretty short space of time. On the global stage, that might not feel like big numbers, but for Europe, considering when we first started this report, we were measuring things in tens of billions. It's massive. We've had a record share of new unicorns out of Europe. We were on stage just after Anton from Lovable, actually. So as we know well, we've got the fastest growing company of all time out of Europe. So a massive amount to be really positive about, real momentum. But at the same time too, this is a global race and competition on the global stage feels relentless. One number that we shared to put things in context was, this year we'll do 44 billion of investment into European tech. The US was 4 times that level. In the last 3 years in the US, there's 500 billion of investment. The line we used was, we're bootstrapping our ecosystem. And the crossroads moment is we have to now choose what's the path forward that we want, because if we want to be serious about building a future on our terms, in our vision, then we need to build the capability, the capital stack, and the support for our innovation ecosystem to give ourselves the best shot at doing that. And maybe I'll stop there because I can get a bit more into, how do we get there? But
let's just go. Well, so to recap, things are going great, right? Like on the numbers level, investments rising, enterprise values rising, more unicorns, more revenue. Like everything's moving in the right direction. And on the kind of cultural side, optimism is up, ambition is up. It's like everything's going in the right direction. It's like this is exactly all we could ever want and dream. But on the other side, what do they say? Like comparison is the thief of joy. And we are in a global competition. And we are, like European tech is crushing it. We're having an amazing moment. But so is American tech, and they're sort of still absolutely dominant. And
the simple way of thinking about it is the bar got raised again. So we raised our bar, but the bar got raised again. And so it's like, we, as I said up on stage, we can and should celebrate that we've got, a handful of 100 billion plus tech companies. But, if the bar now is trillion euro companies, we need to get to that. And so what we set out was 4 missions, basically that describe the end state that we want to work towards, and how do we essentially get to a Europe that truly is fast, frictionless and fearless is what we said. And so those 4 things, fix the friction. So how do we really work as one market with one rule book? We can get into the story of fragmentation and all the bureaucratic overhead that slows progress. Empower talent. So how do we really, particularly in this moment in time where it feels like there's a real opportunity for Europe, make sure that this is the best place to attract, to reward, to retain the most ambitious builders. Fund the future. So that's all about how do we actually get to a place where our capital markets across private and public are deep, liquid and homegrown, where we're really mobilizing European institutional assets as well as European savings to put them to work to fund the future. And so from first angel check all the way into IPO and beyond. And then the last one is, we called it champion risk. But what we're saying is we need to get to a place where we cement risk culture and create it as foundational infrastructure for us. So that means it's as critical as energy or capital, like how we celebrate ambition, how we celebrate success, also how we talk about failure where we've still got work to do.
Love it, like super clear ways that we can improve and drive the ecosystem forward. One area I want to go into, which I think you mentioned, that something that I'm really interested in is about capital.
Yeah.
And you talked about saving capital, but also institutional capital. Yeah. So many of the VCs that I speak to talk about how so many of their LPs are not European. So even when you have European VCs, you have American money coming in as LPs and still being able to get so much of the value from European tech success stories. How do we convince, motivate, inspire European, whatever it is, pension funds, funds of funds, to channel their capital into European VC? Like, what stories do we need to tell? What do we need to do to unlock that kind of like cash cow?
Yeah, well, I think the good news is that stuff's already happening, right? So it's not that we're starting from zero. Yeah. We have seen that because, like, as you say, like everyone's been talking about this for so long now. What is different now is this general sense of urgency and a realization that we really do actually have to act and move the needle on it. And so we've seen in the UK with Mansion House and now that converting into something called Novo, in France with Win, in Germany with Tibi, that it can be done if you bring together those institutional investors with the, catalyzed by policymakers actually, with the investor community themselves, that we can move the needle on that. What really needs to happen, though, is that we do it at continental scale, because that's going to be the thing that that truly gets the capital flowing through. And here too, it's probably not very well known, but the Commission, European Commission, is working on something called the Innovation Investment Pact, which is basically about doing the same thing. They've taken all the lessons from what they saw in France, Germany, and the UK, and then do that at European scale. And I think maybe just like one more thing to say is there's the economic rationale, right? Like, this just makes good sense from a returns perspective, and European VCs being able to demonstrate its track record now on that front. But the other thing that I think is going to make a difference here is how do we basically build Mission Europe and create the emotional case and the strategic case for it, like America first. That has resonated, right? Yeah. And America first as a movement changes how people invest, changes what jobs people take, changes where they choose to build, and we need to get to something similar to that. And we need to create those moments in the spotlight on stage with prime ministers and with investors, and that's going to be another thing that I think gets the tap turning.
And what do you think about European nationalism? Do you think we need more of the way that America is so good at selling itself, so good at storytelling, and so good at uniting? Like, who can disagree with America first? Yeah. Who can disagree with the principles behind Make America Great Again? There's such amazing marketing techniques. Do you think we need more European nationalism in marketing?
So here's our challenge, right? Yeah. Which is in reality, we're dozens of countries coming together, but we must act as one continent, because the only way that we can be truly relevant on the global stage is by coming together as one region. And I honestly, what you hear in the conversations here is, and you hear it from Anton at Lovable, I want to build, not just from Europe but for Europe. Yeah. And I think that sense of pride and sense of mission, it's there for a lot of the founder community. Actually, we asked this question in our survey, I should say. So we asked the question, to what extent is basically Mission Europe part of the way that you think? Like, how intrinsic is that to the building of the company? And 1 in 2 founders say, yeah, this is like core to my mission to prove that it can be done from Europe.
That's
There's
crazy.
right? There's another third that's like,
Wow.
there's another third that says, yes, it is, but I'm going to have to also think about this, from an economic perspective,
like
like what
see your
makes sense.
business.
And then there's 15 that are based, like 15% that are like truly agnostic. I'm just going to build wherever it's easiest and fastest.
That's so interesting. So there's
So
a real
it's
sense
there,
of,
right? It's
like,
there, yeah. And so,
that's so interesting.
as you say, how do you build that narrative to really create that sense of alignment around this Mission Europe,
Yeah.
which is what you're doing too.
Yeah, well, I mean that's kind of why I asked about European nationalism, because it's like it feels like there needs to be a broader pan-European movement of like, we are Europeans. It's not even EU, or like, we are Europeans. And we want to see success, economic growth, GDP, $1 trillion tech companies, and it feels like that we're sort of missing that unifying force of like, we can do this.
Yeah.
We should be doing this, and we need to sell our story more.
And I think exactly as you say, like, let's not be quiet
Yeah,
about
yeah.
celebrating success,
Yeah, yeah.
celebrating ambition,
Well, God knows the
celebrating
Americans
progress.
aren't quiet about
right,
it, are they,
exactly.
right? And they're so good at it. It's
Yeah.
like one of the best things about speaking to, American founders and investors is the passion and the pride that they take in their own
and I
success.
think, like, one thing that we said on stage was comparisons to the US. Like, we would always say, like, let's not always compare ourselves, but those benchmarks are helpful. Like, those benchmarks help us to realize, like, where the bar is, but they don't define us.
Yeah.
So, like, we'll build a Europe in our own vision. We'll build Europe that's not like anywhere else. But we do need to all get behind that idea.
Yeah, and I think those comparisons are helpful, right? Because it's aspirational, and, and it does help us highlight our own weaknesses.
Yeah, exactly.
But it's like, we also have to forge our own path, and we
100%.
have to do it in a European way.
Yeah.
Like, one of the things I'm not anti-America, but I always look at America and I look at the GDP growth that they've had, and it's been phenomenal. Like, I think they're 50% richer today than they were 15 years ago. I mean, it's just like GDP growth that we can't even dream of, but they still have a lot of the issues that we have even without the GDP growth. And I think that's what I love about Europe, is that we have this culture of lifting everyone up with us, right? It's like when one of us succeeds, we all succeed as a society, and it's like, we need to find a way to build the companies, to grow the GDP, and do it in a way that aligns with our European way of doing things.
I couldn't agree more.
Yeah. Sorry, I feel like we've been like sidetracked and chatting.
No, it's not sidetracked at all.
No, I love it. And so you talked about talent, risk, and actually, I think what I was going to ask is, like, what do you see as the tension or the different roles and responsibilities between policymakers and the ecosystem? Like, as people who operate in the ecosystem, there's only so much that we can do.
Yeah.
What is it that we should be doing, either on like risk or talent versus policymakers who? I think it's quite clear that what people are asking for of them. What should we be doing as ecosystem players?
Great question. So one thing that we said was, this is not a time to be a bystander.
Yeah.
This is our moment to speak up, to show up, to basically connect, because there's never been a greater openness to listening on the policymaker side. Like, they understand that they need to make changes. But there's a difference between identifying a problem and coming with a solution that actually fixes the problem and actually creates something that is going to be helpful and get used as companies scale. And so in that design and implementation phase, that's where it's really critical that we all show up to those conversations. So, something really simple that we said was, sign the open letter. Like, look at what happened in the UK over the last couple of weeks with the exit tax. It's extremely powerful when people do one small act, which is sign an open letter, but we do it at the scale of our community, and then you get, when you've got amazing people like Dom at Startup Coalition also kind of channeling all of that, it makes a difference. So sign the open letter, show up to the side event, like, respond to the consultation. It all feels like a micro action, but it's super compounding, and so I think that's that's one thing that we can do. The other thing, which overrides everything, is just keep building, right? Because, like, the reality is we've gone from not really having an ecosystem to speak of at all 20 years ago to having something extraordinary, like we've said, with a bunch of headwinds. So whether anything changes or not, like, we're going to keep making extraordinary progress because founders keep building, and there's just like this organic learning and sophistication that we've acquired. On the founder side, on the operator side, on the investor side, and that's going to keep taking us to amazing places. What we've said is, if we get these changes and we get them designed and implemented in the right way, then we raise the ceiling and we steepen the trajectory of our progress. And so that's like, okay, well, if one is the base case, this is like our upside vision case. Let's work towards that. And yeah, I mean, the 28th regime is going to be a really interesting test moment, because I think like this becomes the first time where we can sort of test whether policymakers are really serious. Like, are you in it to win it?
Yeah.
Because if you are, like, then take the EU Inc. proposal and put that forward and make it happen. And then, like, what's that going to do to belief and trust? Like,
I mean, that opens the door to all sorts of collaboration and policy changes down the line.
Exactly.
If you had to put a percentage, probability, 28th regime happens the way that we want it to happen. What is it? It's making it a directive, not a...
regulation, not
directive.
We're hearing reasons to be cautiously optimistic. I honestly, I can't put a probability. I think it's like, who knows? I can't put a probability on it.
You got no way that the wind is blowing. You think it's like...
I think like what's being worked towards is like, how can we shape this in a way where it can get through under... I'm going to get quite technical now, but under qualified majority voting. So basically where it doesn't require unanimity, and then that can be put forward. But it sounds like there's still some things that are being considered to be put into it that could create more friction in the approval and decision-making process. And so that gives me a bit of cause for concern. But you know what? Like, this is why we just all got to keep talking EU Inc. And bigging it up and making that resonate, because that rallying that we've seen over, like, this time 12 months ago, it had kicked off, but what we've seen in the year since has been nothing short of remarkable.
Amazing. Well, look, final question. Big predictions for 2026, 2027. Where do you think the state of the European market is going?
Yeah, I think it's like we said, we're gonna keep keep growing, and we have incredible momentum behind us. One of the things that we highlighted in the report is a mighty 50. These like rising European champions. I think we'll see more from them on the global stage.
Yeah.
And then look, as we said, like, we've got 28th regime, we've got an innovation act, we've got this investment compact. There's a whole bunch of things literally over the next 12 months being talked about. It's going to be really interesting to come back here next year and see where we've got to. But look, we're starting to measure things in trillions.
Yeah.
That's exciting, right?
It's the first time.
Yeah.
Amazing. Well, look, Tom, thank you so much for joining, and thank you for so much that you do for the state of the ecosystem report that you do. So
thank you as well, and I throw it right back at you.
Well, it's early days for me, but
always great to chat.
Thanks. Welcome back. We are still here in Helsinki at SLUSH. We're having a good time. I'm here with Eric, partner IVP, one of the leading VC firms globally. How are you today? Thank you for joining me.
Thanks for having me, Seb. It's great to be here. Great to be at SLUSH. Love the energy. It's definitely chilly outside today, so for those of you at home, you enjoy the warm comforts, but it's a great event. It's great to be here.
And what brings you here? I'm
not trying to be a shill for SLUSH, but I think SLUSH runs the best tech conference in all of Europe and arguably the world, and so I've been coming here. This is probably my 10th time.
Wow.
And so it's definitely a fixture on my calendar. Again, I don't mean to make this sound like an advert, but I'm a big fan of what they do here.
And when you come here, what are you looking to do? Is it support your portfolio companies, meet new founders, meet LPs? What's kind of the objective for you coming here?
I feel like you've just nailed my entire 4 days here, because it's all of the above. I mean, We have some companies in Finland, and so it's a very natural board meeting opportunity because everyone's coming in. Certainly meeting with existing portfolio companies that are also here, new prospects. LPs have now started to show up. And frankly, it's kind of funny because, I'm based in London nowadays, and when you take that flight this week, it's seeing all the people that you were trying to see for the last 3 months in London, but instead you just do it here. So It actually ends up being pretty concentrated, pretty intense, but pretty convenient.
I mean, it's amazing. The amount of people, the relationships that I've built online through social media and whatever, everybody's here. Everybody I've ever spoken to in the tech world is like in this tiny perimeter, which is amazing. How are you finding London?
I've been there about 2.5 years now. IVP has been investing in Europe for over 20 years, but we had really done that via airplane from the Bay Area. And one of the things that we decided as a firm post-pandemic was you really can't do venture over Zoom. And I like to say that Zoom is a nice complement, but is not a substitute for face-to-face interaction.
Yes.
And we've had the good fortune to be involved with some of the most successful startups to have come out of Europe, whether that's Supercell or Klarna or Wise or UiPath. And we feel like there's more of that to come. There are very many talented people in Europe. Tech is spread from what was a cottage industry in the States to now a global industry. And in order to be connected to entrepreneurs, meet them earlier, be more helpful partners, we felt like setting up an office was the right thing to do.
Yeah.
And so we did that, and there are now 5 of us full-time on the ground based out of London, covering the whole of Europe.
And how do you find it covering Europe from London? The portfolio companies that you've got, people like Supercell, Klarna, very Nordic in their history at least, Spotify as well, and even Wise to an extent, even though it's sort of like a London fintech. How do you see the ecosystems of across Europe from your position in London?
I mean, London is really a launching pad for us. It is, I think if you look at the stats industry-wide, London is a majority of where the capital is based.
Yes.
But that just happens to be where the investors have offices and live, and many are American transplants like myself, and so it's slightly more convenient. But a pro and a con of doing a venture in Europe is that the market is more fragmented, and so you're spending a lot of time on planes and trains. We make 2 to 4 investments a year on this side of the Atlantic, and there's no guarantee that any of them will be in London. And we happen to have done one this year, which is great. It's literally down the street from our offices, so that makes it convenient. But otherwise, there is a little bit more travel involved relative to, say, having a high concentration in the Bay Area.
And how have you seen the ecosystem across Europe develop and change, both from your days in America, but also now kind of being here, boots on the ground?
I think a common thread is that entrepreneurs want to solve problems that they have faced themselves in a very visceral experience that they have for themselves. And I think what you see is some kind of regional development and pockets of talent in certain areas across Europe. And so, for example, gaming is very strong, and there's a very strong DNA and community here in Helsinki for that. There happens to be also a strong gaming community in Istanbul, and also in Barcelona, which is kind of not what you would think about if you were just sort of throwing darts on a map.
Yeah.
On the flip side, we've met with a lot of German companies, and they tend to be working, particularly in the software space, on things in manufacturing or factory automation. Why? Because they have not let that part of their economy degrade relative to other Western societies, and so startups going after that market will have customers, early customers nearby. We invested in a company called Cradle, based in Zurich. It is an AI application layer company that helps biotech and pharma companies accelerate their drug discovery process. Well, it turns out there are a lot of the world's biggest biopharma companies based in Europe. Novo Nordisk is a customer, and so it's nice for them to be close. Roche, of course, as well. So there's that proximity that I think creates opportunity that entrepreneurs then want to go after.
Amazing. I've actually got Cradle on the show tomorrow.
Oh, excellent.
Which I'm looking forward to. And can you kind of give an example of maybe a European investment that you've made and talk a bit about how you assess an opportunity, what you look for, and kind of just give a bit of flavor of that?
Yeah, so one important point for us is that as a firm, our strategy is a single fund, single product. And while we have offices across multiple geographies now, every investment is measured against the breadth of opportunities outside. And so we do not have a quota by vertical market. We do not have a quota by geography. If the third best application software company is better than the first best fintech company, we'll make that third best application software company. Same thing. So every investment that we might make on this side of the Atlantic has to be as good as anything we might find anywhere else, including in Silicon Valley. And we think that drives the best results. So in that sense, things aren't really that different. We're looking for big market opportunities. We're looking for founders and founding teams that have drive, that have motivation, that have a unique angle on the market as to why their company will exist and should win, the ability to recruit talent. And of course, we're looking for feedback from the market, i.e. their customers, whether they're enterprise focused or consumer focused.
Yeah.
They have to be doing something that's getting their target customers' attention.
Yeah, amazing. And what excites you about European tech ecosystem at the moment? You know, we've had Atomico have just released a report on the state of European tech. I just had Tom talking about the report and all the insights, and investments are up, valuations are up, enterprise values up. There's more money going into it than there has been in a number of years. We seem to be over-indexing, or at least going big on the application layer. We've got an amazing kind of cohort of application AI companies coming through the ranks and scaling. When you look across the ecosystem, what is it that you're excited about? Where do you want to be investing, or what are you seeing as like the real strengths of Europe?
I would echo your point on the application layer,
Yeah.
and that frankly is consistent with what we'd like to do as a firm as it relates to AI. Most of our investments have been application layer investments, and we've been very happy with that. But in terms of the European ecosystem, I think we're looking again for sort of pockets of relative competitive strength. And so I think Europe is really good on the fintech side, for example. I mean, there's one neobank in the US, and there's at least 3, maybe 4 that are bigger than that one in the US. And so you see that as an opportunity. I mean, Wise, for example, was born out of a local pain point. Most Americans don't travel outside the country and therefore don't need to change currencies, but that's very common in Europe, and so gave Tavid and Christo the sort of opening to say, hey, there should be a better way to do this. We shouldn't be getting fleeced every time we want to go from pounds to dollars to euros.
Yeah.
And so we look for unique angles, but within that, the TAM still has to be big. And so when we're investing here in Europe, because again, we're judging them on the basis of any other company we might invest in, they also have to be going after markets that are equally as big. And so a prerequisite is that if you're based on this side of the Atlantic, you have to decide somewhat early on that you're also going to be a global winner or a global challenger and not just a European company. If that's the case, that's totally fine. You might be a great investment, but just not for us, which is totally fine.
And it's one of those things that I actually, that stands out among European founders. And as, speaking to people from OpenAI, and had Ilya from Kleiner Perkins on earlier, that Europeans have to build with a global mindset from day one, because no local market is big enough, and that if you want to scale just across Europe, you have to scale across 30 different countries with 30 different regulations and processes and all this kind of stuff. So I think that's a really interesting point, that that there's a slightly different mindset, that international expansion and globalization is like a day one priority, unlike American companies where the market is so big that they don't have to. I want to talk about, what role do you play in, if any, in helping European companies and founders access either American capital, American customers? What kind of role do you play there?
We like to think we're helpful partners to our companies regardless of where they're based.
Yeah.
In terms of this sort of transition you're talking about, moving from one side of the Atlantic to the other, we actually think that's where our quote-unquote product market fit is in terms of the venture ecosystem. Mm-hmm. And so we're typically investing when companies have product market fit and thinking about the next chapter. So they've started to have some success in their home market beyond their home country. So by home market, I'll say they've had some success in Europe.
Yeah.
And they realize, though, to what we've been talking about, they have to go after the US market, and having a US partner, I think, brings a lot with it. There's sort of the stamp of approval that you actually are telling the world your aspirations are bigger.
Yeah.
Having that stamp from a reputable venture firm in the US helps, frankly, on the recruiting side, and you will need people on the ground to succeed.
Yeah.
That really helps. It helps us open up our network to create opportunities for talent to come find these companies with the perception, hey, they're serious about being here in the US, because I think as an individual job seeker, you don't want to take a career risk for a company that may not be committed to the market. And so that mitigates all of that. And then very tactically, I'll give an example. We had a company that migrated to Austin, Texas, and they decided first to open up a sales office, inside sales, which is a logical place to do it. It's cheap, you can serve most of the country from there.
Yeah.
They didn't know, heads or tails on how to get that set up. So yes, you can help find lawyers, but we sort of guided them in the process. And then as they built out their inside sales team, we actually recruited in one of our former operators to basically coach the founders, who are both technical and product oriented, to build a sales team. How do you set up comp structures? What's the right leveling? What's the right ratios? How do you actually interview people? Because the one thing about salespeople, particularly, and I mean this with all due respect, but when you think about European technical founders, interviewing American salespeople, the American salespeople can tell a pretty good story.
Yeah,
and so
yeah.
we have an American along the side to make sure you know that was actually a good question, that was a wrong answer, this person is good and that person is full of it. So having that coaching was actually really helpful.
Yeah, I can imagine. I mean, one of the things we've been talking about a lot today is the strength of American storytelling. And it's so interesting to hear that it's like, that goes all the way from founders and investors and politicians to just employees trying to get jobs. And I've actually heard that from other founders, that it's Americans are so good at selling themselves that everybody seems like a great fit because they're just...
Particularly if you're in sales.
Yeah,
I mean, if you're a salesperson,
you're a
you can't
great
sell yourself,
storyteller. Yeah, exactly.
you're in the wrong line of work.
Yeah, that's super interesting. And what do you think, what advice would you give to European founders who are kind of thinking about maybe going to the US, maybe raising money from US firms? What should they be thinking about and how do they go best about it?
I would think that the world is getting smaller in many ways, so I think European-based companies might not have thought about expanding to the US until maybe they were 50 million in ARR, say.
Yeah.
And I think that today, that bar or that thought process has actually dropped down. Maybe it's 10, 15, you might start thinking about it.
Yeah.
Now, current U.S. immigration policy aside, which we will not touch on this in this broadcast, I do think it is important from a cultural perspective. And most companies have multiple founders. Have one founder go and set up a beachhead. And New York is a very popular place for that, given the tech concentration as well as the proximity and the time zones. Those are things that are laws of physics that are somewhat immutable.
Yeah.
And it doesn't have to be one person of the founding team raising their hand saying, I'm going there forever, but having some landing party to make sure that the company culture grows the way you want is super important, particularly the earlier you are in your development. So I'd say that is almost a prerequisite at this point. And fortunately, I think even though I'm mostly a West Coast guy for most of my life, I do think New York is a very livable place.
Yeah, and one thing that I hear is that sales in America is quite different to sales in Europe. How relationship driven is it? And how important is it to have somebody on the ground who is a founder to help with that sales process?
Well, I think there's two different points there. I think it is important to have a founder on the ground because they can really speak to the product vision, ethos, mission. But if that person has just come over, I don't think they've probably got a lot of the pre-existing relationships, and that's where you're often hiring an experienced sales leader or sales professional in the US to be your sales leader. And the relationships help, but ultimately the product has to sell, and those things actually kind of go hand in hand. A great product without sales is not going to reach its full potential, and a great salesperson can get you somewhere with product, but similarly, you're not going to dominate the market in this day and age. I think in the past you may have been able to do that like Cisco did, but not today.
And do you think it should be the CEO, or do you think you could have a technical co-founder, a commercial co-founder?
There's typically on a founding team, someone would be the more product-oriented and some might be more sales-oriented. A lot of times what we're seeing is the product is built in Europe because that's sort of where the genesis is.
Yeah.
And if there's someone that's more commercial, that person might be the one that would be in the States because it plays typically to strengths or interests, frankly. So I probably wouldn't pick up the product leader from Europe who's overseeing that function and dropping that person in the States, because then they're actually doing remote management and don't get the benefit of the go-to-market capability.
Got it. Okay, look, I want to ask two final questions. One about your kind of personal portfolio of investments, and then a final one about a guest I'm interviewing tomorrow. So, a VC I interviewed earlier this week said that every great VC has got three career-defining deals, the deals that they look to with great pride and that they're most happy with, and that VC is just a game of making it in between those great deals. When you look at your career to date, and I'm sure you've got more to come, what are the three great deals that you've been most proud of?
Well, I will certainly echo, I hope I have more to come. But I'd say sort of, trajectory changing, if you will, or really impactful ones for me personally. Supercell was one of the first ones I did at my current firm.
Yeah.
It's based here in Helsinki, so we're in their hometown. It's a big part of the reason I come to SLUSH. Ilka sort of mandated that we all come the first year after the investment, and I was like, this is pretty cool, and I've been coming back ever since. Another one that I'm really proud of is being involved with Datadog. It's a great company. Actually, two European founders as well. They were originally French, but built their company in New York. So what they've continued to do, adding on products, being so disciplined in their growth, very proud there. And then one that is still on the journey, but I'm really proud of, is Whoop, which I've been involved with for about 5 years now. And I think they have a real opportunity to, this sounds a little grandiose, but I think they can make it real, but they can truly impact the health outcomes of hundreds of millions of people in the world, and that's a pretty noble outcome to be able to do that, frankly, while making a great investment for my LPs.
I was going to say, it's not a bad track record. That's 3 amazing companies that you've backed. What about the anti-portfolio? Are there any deals that keep you up at night where you think, we had the opportunity to invest, but maybe we fumbled it and they said no, or we didn't see the vision, anything like that?
How much time do we have left? I think one of the good news parts about my business is even when I get it wrong once, oftentimes we have a chance to rectify that mistake.
Yes.
And Datadog's a great example. We should have done it the first time we saw it, and we didn't. And we did it a couple years later at 10x the price. And it still worked out great. Robinhood's another one. So I try to learn from my mistakes, and I will keep making them, but hopefully the ones that I get right will outweigh the ones that I get wrong.
And that's amazing of having the flexibility of being able to come in later. You can see that you made the mistake, but you maintain that relationship. So look, final question. I've got Jarek from DeepL tomorrow. Anything I should ask him?
Jarek is a really special individual, and I think we've talked a lot about founders and founding teams. Jarek is a very successful CEO leading a startup, but he actually wasn't the founder. Mm-hmm. So maybe talk to him about sort of what that experience was like for him. And then we talked about entrepreneurs solving problems that are very visceral for them. Talk about his personal story. He was born in Poland, moved to Germany when he was, I believe, 13, didn't speak the language. And so DeepL, which is an AI-powered language translation company, they allow people to connect in the language that's most comfortable for them, and that's a really powerful thing. And so he'll light up when you talk about the impact he can have on people's lives.
Amazing. Well, I'll definitely be sure to ask him. Well, Eric, thank you so much for joining me.
Thank you very much.
Hello and welcome back. I am here with Lucas, the co-founder and CEO of Tandem Health, one of the most exciting companies coming out of Stockholm at the moment. Stockholm is having an absolutely insane moment. The Swedish ecosystem is absolutely crushing it. So thank you for joining me. It's great to have you here.
Yeah, thank you for that great intro. Great to be here.
How are you finding SLUSH so far?
Actually arrived at SLUSH now 20 minutes ago or so. So this is the first time I'm inside SLUSH.
Straight to scaling Europe, that's what we like.
But have had a bunch of other side events and some customer meetings also, given that we've expanded into Finland with Tandem.
Very cool. Look, we're going to get into all of it. For those who are not familiar with Tandem Health, can you talk a bit about what you've built?
So at Tandem, we think it's insane that clinicians spend 40% of their time on admin that could be spent with patients instead. So developing essentially an AI medical assistant that helps doctors write medical notes and do other documentation connected to the care visits. So how can doctors spend less time on admin, more time on care, and also provide care with even better quality? So founded a company a bit over 2 years ago, been an exciting journey since then. Now supporting more than 1,000 care organizations. We've expanded to 10 different countries. We've raised a bit over 50 million in funding and grown from being 20 people at the beginning of this year to now being around 100 people. So
wow,
exciting times with lots of stuff happening.
There's so much to get into. Can we pick up on that last point? Scaling from 20 to 100 people. How have you found that as the leader of an organization? Have you struggled to maintain quality of employees, to maintain a strong culture? Can you talk a bit about that?
I think for me as a founder, one of the most exciting parts of the journey is also that I get to scale with my company and I get to go through the various growing phases and learn from those. I think the team size growing is one of the very key parts of that, of how do you go from everyone having a joint stand-up in the beginning to now having distributed across many different countries and having it split up and so on. And how do you think about the organizational structure that you set up? How do you think about the ceremonies that you run and similar? This is something that I spend a lot of time thinking on both how to do setups, also how to do the hiring. I think that's the most essential thing to get right, and that the people that we hire now at this stage, are the people that will build the company for many years to come. And
how is your time split? Are you focused on hiring more than you are on product more than you're on sales? How does your time split look at the moment?
So I have 2 co-founders, one that is CTO leading the tech parts, and then one that's Chief Commercial Officer leading the sort of commercial parts. And then I'm a bit in between, so being the bridge between that, being involved in the most important efforts, and then also driving a lot when it comes to marketing, when it comes to finance, when it comes to legal, when it comes to hiring and talents and so on.
Bit of everything then.
Yeah, that's the fun part of it.
Can you talk a bit about, you mentioned you're in 10 countries. Can you talk about kind of which countries you've been able to see success in? And then also, who are your clients? You know, are these private care providers? Are you dealing as well with government organizations and government providers? Can you talk a bit about that?
Yeah, I mean, so we started out of Sweden, and then our expansion model has been like finding an excellent country director to run the local sales and commercial efforts. To both do the 0 to 1 step, but also can do the scaling step afterwards. So for example, Carol that we have in Germany, like medical doctor by background, was a founder CEO of her own health tech company, was at BCG for a couple of years, was the managing director of another health tech company expanding into Germany and so on. So like people that really have a track record and experience for doing this. The main other markets that we're in now is the UK. We have a team of 10 in London, we have 5 people in Germany, 5 in France, 4 in Madrid, and then people in all of the other Nordic countries, and then also 1 in the Middle East pursuing that.
So you're running these countries, like boots on the ground, teams there. Is that difficult for you, kind of, you know, having teams spread out all over Europe? How do you manage to sort of keep the team motivated and united on a single vision?
So I think very important how you set yourselves up to enable that, so that you have a cohesive culture, cohesive way of working, everyone feels that they're working towards the same mission as well. I mean, we're, for example, dedicating a lot of effort into like going on offsites twice per year where we gather the full team, having also regular gatherings at least on a quarterly basis where everyone comes to Stockholm for a winter party or some other setting or similar. We have a company all hands every week where we gather the full team and go through the most exciting things that have happened and what we learned from it. And then I also travel around quite a lot. So I was in Munich last week, I was in Paris 3 weeks ago, going to London now next week, and so on. So that's also part of the job.
Yeah, it makes total sense. And I also want to talk about the companies that you're selling to. So, you know, healthcare has a reputation for being bureaucratic or slow moving, and yet we're seeing companies like yours who have been able to scale rapidly, onboard dozens and dozens, hundreds of users and customers. What's been your experience selling to and onboarding kind of healthcare clients?
I think what we have that is quite unique in healthcare, I mean, is that now with AI, the technology is so transformative in terms of what it enables. We have a product that the decision makers love because they see the productivity gains, but we also have a product that the individual users, the doctors, love because it solves the number one pain point that they have in their day, which is that they are sitting multiple hours and doing note-taking instead of meeting patients. So we both get this top-down, but also more of the bottom-up approach for it, and getting more of that virality. And then also, I mean, solving the pain point that they have and doing something that just enhances their current way of working without needing to replace too many things also makes it a lot simpler. So I think it's really about how do you find the right use case and develop a product that people really love.
And how do you go about thinking about that? You know, your product roadmap more generally. Are you spending a lot of time with doctors, you seeing them use their product? Are you close to them? How are you designing your product roadmap?
So when we started Tandem, we initially spoke to all doctors that we knew, understanding what are the key pain points and similar that we can help solve, and then been working as closely as possible to our users. So like 6 weeks after founding the company, we went live with our first pilot clinics, 1 primary care clinic and 1 mental health clinic. Then spoke to those literally every single day for multiple months to iterate on the product and really be user obsessed.
Amazing.
And I think one of the parts here that really helps is that almost our entire commercial team also has a medical background. So it's doctors on the team that are part of doing both the sales, but then also are part of doing the product development. Because in the end, a doctor that is a bit techy is much better at how do you do the prompt engineering for writing the perfect medical notes as opposed to a software engineer, because a software engineer don't know how you write a medical note.
Yeah, and we're seeing that across all these sort of like vertical AI industries, whether it's legal, coding, you know, doctors. That context required is so important that you're able to input that into the product development. I also want to talk about the European tech ecosystem more generally, and also Stockholm and Sweden. You're building from Stockholm, you're building from Sweden. What are your views on European tech at the moment? Do you think we're in a great place, not good enough? Just tell me what you think.
I think that there's challenges in terms of being quite fragmented across the countries. We see and feel the pains of this a lot in terms of having not only the European-wide regulations to adhere to, but also having local regulations in every single country that has their own takes on it and their own certifications that you need to do for selling into public sector and similar. But I think also if you know how to navigate this can also be more of a competitive differentiator and a strength instead.
Yes.
I mean, because it is complex, but it is possible at the same time. And we do see a lot of synergies from being active across European countries as well. I mean, both in terms of say that like the UK is perhaps 2 years more mature than the French market when it comes to what we do.
Really?
How
That's
can we
interesting.
then compete in the UK, that is the most competitive market in Europe, and then bring the learnings from that to the other countries that we're active in, and then we have a massive head start compared to the other competitors there.
That's super interesting. So the UK is sort of ahead in terms of its adoption of AI tools and technology, and so you're able to take the learnings from there and actually bring the other countries up to speed quicker.
Yeah, exactly. And then, I mean, by us having the experience of having done at-scale rollouts that are significantly bigger than any rollout that has happened in the other country, we also have a lot to bring to the table for how can you sort of kickstart that country and really launch it a lot quicker.
Interesting. And you've spoken before about building from Europe and taking pride in building in Europe. One of the things that people always talk about is whether or not building in Europe is building on hard mode.
Yeah.
And that people say, less available capital, it's harder to sell to customers. I wanted to get your take on that.
Yeah.
Do you think building in Europe is building in hard mode?
I mean, I think hard mode to some extent, but it has different challenges, I would say, also to build in the US. So for what we do, I see Europe being more lucrative than the US. Like, we are very explicitly not going to the US, but rather being all in European focus.
Yeah.
And partly seeing that the US is also a lot more competitive in this space. There are multiple companies that have been around for longer that have billion-dollar valuations already. And also on the system landscape, that there's essentially 2 medical record systems that you become dependent on, that you need to integrate with. And that puts you in a much weaker position as opposed to in Europe, where it's fragmented, which presents challenges in terms of fragmentation, so it's more difficult to get started, but it also means that it's more defensible in the long term, and that you can build something potentially much greater also here.
Interesting. And when you look at the European ecosystem versus the US, are there things that you think we should be taking inspiration from? Are there things that we should be thinking, the Americans are doing this so well, we need more of this here in Europe?
So I was to San Francisco for the first time 2 months ago, roughly.
Oh, amazing. How was it?
It was great. I mean, one of the key takeaways being really how people dream and think a lot bigger there. And I think that's a mentality that we should bring to Europe more as well, where like the norm is that I'm expecting that I will conquer the entire world with what I'm building. It's like on a different scale than what you meet founders thinking in most of the European countries.
So we need a bit more of that ambition and that sort of the dreaming as well, and supporting each other. I want to talk about Sweden, right? The ecosystem right now is crazy. It feels like, we're seeing round after round come out, but like, in the AI company level, like really interesting companies being built by kind of Swedish people here in Stockholm. We're seeing the same in like Breakout, Late Stage, Lovable, Lagora, Sana. We're seeing so many companies come out. What do you think is going on right now in Stockholm that is like enabling this amazing ecosystem to thrive?
I mean, I think the Swedish and Stockholm ecosystem is at this like sweet spot of a size where it's sufficiently big to have talented and visionary people, but it's also sufficiently small that you get a really tight-knit community. So I mean, like, I'm having dinner on Saturday with the founders of those 3 companies that you mentioned, from Lovable, Lagora and Sana, for example.
Okay.
And everyone in Stockholm also has this mentality that you really want to pay it forward and help the next generation of founders. So I mean, for me, it's been incredibly valuable to see sort of the previous generation of founders dream big, succeed in that, and then pay that forward and sort of teach me the ropes that they learned a couple of years earlier.
And are you starting to see the next generation come up? Are you at that point in your journey where you're able to pass it on?
Yeah, I've been starting to do that, and I love doing that also. I mean, I think it's super exciting to see the next generation of founders coming up and seeing how can I do my part in contributing to what they do also.
Amazing. And do you think there are key things that we could learn from Stockholm? We have, one of the things that I think frustrates me about Europe is that we have so much talent, we have a lot of capital, we have amazing ecosystems builders, but we have them all over the place, right? And like America's amazing because you've got San Francisco and you've got New York, and everybody's in one of those two places, mainly San Francisco. Yeah. So the density of talent, the density of people who are just passionate about this world is insane. Whereas we've got London, which is sparsely populated, we've got Stockholm, which is an amazing ecosystem, but then we've got Paris, Munich, Berlin, Turin, everything. What do you think these other ecosystems can learn from Stockholm right now?
I think in terms of the talent density, you only need like 5-10 really talented people in a country or in a city to build something great, right?
Yeah.
So I wouldn't see that as the primary rate limiting factor. I think also one of the benefits or like advantages that Sweden has is that it's also sufficiently small that you think global from day one, pretty much. Whereas if you start out in Germany or in France, then you're more satisfied to start in your home country for 4 years, and then you potentially expand somewhere else. And if you expand somewhere else, you will not be expanding to the Nordics and smaller countries such as Sweden. You will be expanding to the US instead. So I think that also is something that is a different mindset for Swedish founders, and that you think big at a different scale also from the beginning.
Yeah, interesting. And when you look to the future of your journey, you're already live in like 10 countries, you're expanding rapidly. What else do you want to achieve? Where are you looking next? Is it more market expansion? Is it more product development? How are you thinking about the next 2 years?
I'm looking to make Tandem a generational company.
Love it.
That will, in the minds of Europeans, be almost like synonymous with AI in healthcare and Tandem. And how healthcare will be completely revolutionized in the coming couple of years in terms of what does workflows look like and how do you deliver it. And this is something that's needed as well. You have now like an aging population, you have healthcare costs that are rising every year that passes, you have shortages of clinicians all over the world. So also if nothing is significantly improved, healthcare will be a lot worse in a couple of years. And I think AI and technology can really be the solution to this challenge.
Love it. Well, look, thank you so much for joining me. I love, watching your journey. You're one of the most exciting startups in Europe at the moment. So best of luck with it all.
Thank you so much.
Hello and welcome back. I'm here with Henrik from Gillion. Super interesting, super different company, which I'm really excited to get into. Another Stockholm-based founder.
Yes.
Which is just like amazing. We just had Lucas on, so I want to kind of talk a bit about that, talk about the ecosystem. But for those who don't know kind of who you are or what you've built, can you give a super quick introduction?
Yeah, cool. So my name is Henrik and I'm co-founder of Gillion, and we're building an AI platform to help companies and investors understand companies better and invest in them better. And we're using a lot of data to make that possible and a lot of AI on top of that. So that's the first version of the pitch.
yeah, and tell me a bit about where it came from. Where did the idea, the vision come from?
Yeah, so all my life I've been into tech, data and business. Started off as a developer back in the days, and then wanted to learn more about businesses. I went to school, to uni, and then to McKinsey. And then I came to Spotify in 2010, where I kind of discovered how we could use very large data sets to run companies better and faster. Because all the very granular data sets that we could get access to revealed a lot of information about how our customers were behaving in the apps and so forth. So that data set, the granular level data set, was new to us at that time. And later after Spotify, I came to start a VC fund, EQT Ventures. And then I saw, if you're working as an investor, why can't we use all that data that actually exists in a company to help entrepreneurs grow their companies better, but also to help fund the companies. If someone do that, then we would end up having much more funding available for companies because the data is actually there, let's use it.
Yeah.
So that's what I wanted to start. So after having been at EQT for 5.5 years, EQT Ventures, I realized let's build this platform, the tech platform, to harvest the data around that actually exists around every company. Put it back in the hands of the entrepreneurs, let them get all the metrics that we had at Spotify. That will help them to grow faster with just that insights. And then let's also connect it to banks and investors, because then we're now unlocking them to create new financial products to be able to fund the entrepreneurs. So like kind of bridging the next evolution of data and AI analytics together with finance to actually give real impact, which is funding to entrepreneurs.
And so you're using data as the foundational layer to then create or work with other organizations to create new types of financial products.
That's it.
So it's not just VC funding, but it's also other types of funding, right?
That's it.
Can you talk a bit about those other types of funding as well?
Yeah. So because I believe, and I think everyone would believe, that if we could make that data available and we can build models on top of this, that's actually exactly what everyone who wants to fund a company or fund something needs. Because everyone here wants to understand and what is the risk level here? Is this an equity risk, or is this more of a, I want to understand the downside because I want to give a credit? So in all those financial decisions, they're happening every day, everywhere in the world, and there is a lot of capital out there. But when you don't have access to these tools, you have to take more buffers, you have to increase the rates because you don't know. But we want to change that. Let's make people know more, increase the certainty levels of this, and the solutions are already there if you build it. So all this data together with AI on top of this, we can now help to not just do venture investing, but also introduce non-dilutive products. So our first flagship product where we started was our growth loan. So this means that from now and since the last 4 years, founders can come to us and then we can give them non-dilutive growth financing if their underlying metrics are there. And this allows them to stay unprofitable, invest in their growth, get up to 5-10 million euros from us or from our partners to fund their growth, come out on the other side, and with the profits pay back the loans. So we try to create this long non-dilutive growth product similar to a venture-backed product or a venture product, but without the dilution. So with this in the market, founders can now choose if they want to dilute themselves or not, if they have managed to get their underlying unit metrics to work.
And can you touch on what those metrics are? You know, is it revenue and revenue growth? Is it gross margin, operating expenses? What are the key things that you look for that kind of gives you the confidence to give them this money? Yeah,
so at the end of the day, it's the same kind of analysis that you want to do with or without this platform. So it's understanding future cash flows, basically. So what is the certainty, where is the likely scenarios that could happen in the future when we look at cash flow in the future. So, but the difference is the ability to analyze that and project that into the future. And for that, when you look into not just the aggregated numbers, but instead look into how does the customers, how often do the customers come back? What are the retention curves? What are the trends? When they launch new products, has that affected, or is that affecting these trends into the future or not? And when you have that level of granularity, we can even look down to clicks and marketing efficiency, all those kind of trends. You can much better understand how solid this is and where the trends are heading into the future. So you can get a much better understanding of what's the range of where this will go. And that kind of clarity and precision makes it possible for banks to basically invest in previously unbankable companies.
That's super interesting. And I guess for founders, the real proposition is you get the cash, but you don't have to give up any of the equity. Right?
Exactly.
Keep control, keep the equity, and that makes total sense. And I'm curious because you've got an experience as an ex-VC. Right? You're coming to this with the mindset of a VC, but you're also trying to take a super data-driven approach. Do you ever find yourself, or is there some tension there? Whereas like a lot of VC is often people-focused, it's relationship-focused, as well as metrics. Do you have to try and push all that to aside and you just say, look, we just look at the financials, we just look at the models, the metrics? How do you balance that?
And I think that balance is something that I had to learn as a VC in the previous job at EQT. So I came in really focusing on the data side because that's what that was my new learning from 5 years at Spotify. We could see, and we had learned, we can understand companies much better if we use this data, right? But investing is so much more, to your point, than just the numbers, right? But it helps so much if you're able to get that analysis right. So you can understand the solution space, like these are the different scenarios, this is what we see, so that when you discuss with the team, you can understand how aware are they about these things. You can have a very sober discussion about different scenarios that could happen. When you couple this also with predictive models and benchmarks, you can also see you can put some sanity in the numbers and assumptions that the founders have. So the discussions that you have with the founders, which is the key, are grounded based on a very detailed analysis. So for me, it feels so much better that our discussions that we have with founders are much more around the future, what they do, the difficulties they have, instead of having to debate the definitions and try to all the time have this feeling of that they try to hide something. So for me, it's like this is the hygiene thing that will be this. It has to become like this in the future of all, like for every investment process, I think.
And you had a lot of experience as a VC.
Yeah.
You probably made a bunch of investments. You're now getting all this amazing data for companies that are looking for funding. Do you ever invest yourself? Do you ever meet companies where you're like, wow, this is a phenomenal company, take my money?
Yeah. No, so we build this platform as a platform.
Yeah.
So we work with partners. So we are connecting on the other side then with different partners of different asset classes.
Yes.
So we have an equity investor network where we have 20, 30 something equity investors hooked up. We know all their profiles, what they look for, so we can offer matching towards those equity investors. And then we have funds and banks that offer also non-dilutive products.
Yeah.
But very well, of course, I'm also like, shit, I'm really, really interested in these companies, some of them. I really see that this has this super potential.
Yeah.
And I do some angel investing on the side as well, but it's very limited so far. Maybe a bit more in the future, who knows? But it's really fun to be like stay on top and stay in the market to see what's coming out every day.
Yeah, amazing. No, it seems like I started my whole content journey in the financial results of UK startups.
Yeah.
In the UK we've got Companies House, and so the very first tool or product I tried building was a database modelled on the P&Ls of the top 100 UK startups for the past 5 years. And it's just like the data that you get and the stories that you can tell, I just thought was amazing.
Yeah.
So for you to be able to sit in this position and to see the data kind of like right in front of you must be an amazing position to be in.
It is.
And
it is.
Over the time that you've spent building this company, have you seen the type of companies change, the type of financial profiles change? Have you seen different types of companies exploring different types of funding models? What's changed, I think, over the last few years as the wider tech market has changed?
I mean, it has been a dramatic change, I think, for the whole market. Whereas when we started this, we thought, it was much easier to get access to equity money at that time, 2021. And we thought, if we're going to introduce a non-dilutive product here, a loan, basically everyone hated loans at that time.
Yeah.
Even with my time at EQT, we built this platform called Motherbrain. And I remember that we could identify that if the companies have debt, it's a very bad sign for a venture investor. Because
interesting.
Because that must mean, this is the 2021 version, this must mean that the company hasn't been able to get equity.
Oh, interesting. It was
but that has changed now, right?
Yeah, okay.
Because the equity markets have been much more tightened, and even equity investors now deem that you need, or they require almost that you have to be not profitable maybe, but close to profitable. We have a very solid plan to become profitable quite soon.
Yes.
Much more risk averse versus what they were before.
Yeah.
So and then the gap to non-dilutive funding, where you also have the same kind of we want to be able to see that you can stay unprofitable. We want to understand that there is an underlying profitability or path to it that you can choose if you want to.
Yeah.
So the lines are blurring. So we can see that that's good for the ecosystem, because now we can see it's not as black and white anymore, and there is more asset classes out there, so more capital for founders, basically.
Interesting. Okay, I also want to talk about the wider ecosystem.
Yeah.
Sweden's having this crazy moment. There's amazing founders. I just had Lucas on. We've got Sana acquisition, Lovable, Agora. What's it like building in Stockholm at the moment?
Well, I think finally, that's what I'm feeling. Because I was at Spotify with Daniel and Martin and the rest of the crew there in 2010. It was so much fun.
Yeah.
But I always felt so alone. Like even when because before Spotify, I came from McKinsey.
Yeah.
And for me, because I had this tech background, I was a developer back in the days. I always wanted to come back to tech. So for me, that was a natural jump. But for all the rest of my friends and my colleagues, they're like, "What are you doing? You're throwing away a McKinsey career to go to what is startup? What is that?" And for me, it was a very brave decision.
Yeah.
At least if you compare it to the common, the feeling in the market at that time.
Yeah.
So I felt very alone, and I felt like we were in such a big bubble at Spotify. We felt like when we were traveling to New York and San Francisco at that time and came back home, it's like, this is the only place in the town where it feels like San Francisco. We have this, the the belief that we can build something for the entire globe from Stockholm.
Yeah.
And you can be that crazy ambitious. You can actually make it happen from here. Everyone else, like, what are you talking about? It's like, this is like nonsense. It's not for real.
Yeah.
And then I felt like that's a shame, and that's what I really like now. Now everybody talks about that, and there's really a belief that people think that you can actually build generational big companies for the entire globe from Stockholm.
Yeah.
And that's really, really good. And that's, I mean, it's natural when you study other markets that you have to have these waves. Like you have to have some successes that then people leave and then start new ones.
Yeah.
And though the people that have seen that world are then bringing that culture and then like mindset with them to the next one. So it's natural that it has to be in these waves. And I think now we are in a second or a third wave or something. So I think this is really good like brewing ground for the ecosystem in Stockholm right now when we've kind of hit critical mass. Because now also all the investors come here. So yeah, it looks good for the next wave as well coming up.
Yeah, and we're starting to see those sort of younger founders, raising their first rounds and sort of AI applications and kind of rising through the ranks. And one of the things that Lucas mentioned was that how the size right now is perfect. You have a big, thriving ecosystem, but it's still small enough to be quite tight knit.
Yeah.
Which I think is a really interesting point because we don't have that in any other European capital. Especially Stockholm itself is a relatively small city.
Yeah, it is.
Whereas in London we have probably a bigger ecosystem, but completely spread out.
Yeah,
and there's no real connections. Which I think is really interesting. I also want to talk about your career path. Going into McKinsey, that's exactly what Lucas did.
Yeah, exactly. We're actually both going to their panel tonight.
Oh, really? How funny! Yeah, was that like the common career path? Is that like the aspirational route for young Swedish people living in Stockholm? Was that seen as the thing to go for?
It's funny, right? Because as I mentioned, I started coding when I was 6 years old.
Yeah.
So I programmed my whole youth nighttime because at that time no one thought it was cool to code, right? And then I worked as a developer full time in the golden.com era back in the days. Built some things then, and but I've always also had this like business thinking that I'm not going to be the best coder out there, even though I was pretty good. I think I was probably more interested in what you could do with it. So I wanted to understand businesses, how they work. So I had this entrepreneurial drive already then. That's when I chose to go to university because I need to learn that. I couldn't really get like where should I learn that. So I went to study, and I also love maths. So I have a master's of science in. I chose industrial engineering and management to get like a full engineering degree, maths and business.
Everything. All bases covered.
But that's interesting because I've been all my life thinking that I'm a generalist.
Yeah.
But after years, I've learned that I'm probably more of a specialist in being a generalist because being a generalist is something that you could be really good at.
Yeah.
So if you are deep but have your specialty is actually to connect the dots. That's kind of who I think I am. But so after school at that program, the main path was to go from industrial engineering, Master's of Science, to a strategy consultancy.
Yeah.
That was like the main career track that you did.
Yeah.
And I felt after 5 years at university that I still didn't know enough about the business side. I coded all my uni as well, so I knew that. I didn't want to yet leave the business side, so I wanted more like how does businesses work? I remember I had that question. I wanted like. This seems so complicated to run a big company. How does it work?
Yeah.
How does a boardroom work?
Yeah.
So that's when I thought, let's go to McKinsey.
Yeah.
So I went there, followed the trail. I was lucky to get in. It was such a good school for me, like the best school to understand businesses. They threw me out like my second day to like have an interview and coach the CFO of a very big company.
Wow.
And I was like, oh my God, I'm so much out of my comfort zone. But given the prep they did to me, I could feel already then that I could be helpful, right?
Yeah,
so nice, cool. But after 3 years there, I was on a good trajectory. But then I was like, okay, now I know how it works.
I know enough.
So I felt like my marginal learning is what I thought was like reduced. And I also remember me thinking that this is too predictable. So I know that where I will be in 15 years. I know the ladder, and that I realized back then I get bored by that.
Yeah.
To know what's going to happen.
Yeah.
So I needed to get back to tech. I needed to build things myself. I didn't want to be a consultant to consult others what to do it and be frustrated that they don't. I want to get into the weeds and do it myself. And I wanted to get back to tech. So that's when I joined the Spotify.
I love it. Yeah, my first job out of university was also consulting, strategy consulting, and I did it for 3 years.
Right.
And I felt the same thing. I always loved tech, and I wanted to get into it, so I left to join as early stage company as I could.
Yeah.
So I joined a 30-person company here in London.
Perfect.
I loved it. I absolutely loved it.
Well, similar tracks then.
Yeah, and I interview a lot of consultants who end up becoming great founders.
Yeah.
And it's interesting because often people are very critical of consultants for being like theoretical as opposed to execution orientated.
Yeah. But I think they are a lot of those.
A lot, but there are so many great founders who've like learnt the trade as consultants.
Exactly.
And then left relatively early and then gone to build great businesses.
But I think if you can find someone who is intrigued by that model because they want, I think they want to learn and they want high pace and they're ambitious, together with someone who has the craft in them, like someone who builds things on their own, and preferably with using code, then I think you have a good mix in your profile.
And then there are similarities between tech and consulting. In the sense of the intensity.
Yes.
And it may not be like building execution.
But
you still have so much to do, and you're working so hard, and
But I think it's also a lot of things that I learned from McKinsey back then was around how. Because we're always so short projects, so you need to be really, really disciplined in what you do, how you spend your time to analyze things. Because you have to come with a conclusion and recommendation in like 24 hours. So you have to be smart where you spend your time. Don't know when you should stop. And don't ask more questions. And instead, it's more worth to jump onto the next thesis. And that skill is, I think, the key that I use so much when. At Spotify, where it was the time when the whole big data thing was new. So we could boil the ocean. Boil the ocean was, that expression,
exactly,
right? And at McKinsey, even before the big data, boil the ocean was like try to turn every stone, look at everything. But it doesn't give you much, right? You have to think about what you really need to make the conclusion. That is so important when you have a lot of data and when you can do much more, right? And I think that's where a lot of projects have gone wrong, that they're just producing more and more charts for what? Like they kind of lose track of what's the question here. And for now, what we're building now into the platform, we're now building a SaaS platform to help any investor to actually make those investment decisions.
Amazing.
Not just provide money, but actually use our data analytics platform as an investor. And then we build that into an analysis tree run by agents. So we help them to define exactly how they should break down the whole investment analysis question into a MEC tree. Where it's really powerful when you can define every single node in that agentic tree to exactly what you should do in this tree to understand this part of the question and then how it should surface up. So I think those learnings from my McKinsey years plus AI is really what can make AI valuable in this age.
Amazing. Well, look, Henry, thank you so much for joining me. It's been a great conversation.
Thank you.
So that's a wrap on all of today's interviews, but don't go anywhere because we're about to go over to the Deal Room Deep Tech panel where the Deal Room team are sharing some insights from their upcoming report all about the state of European deep tech. And I'm going to be moderating a panel there with some of Europe's leading deep tech investors. So join me over there. I'd also like to say a quick shout out to my sponsors, Databricks and Harmonic. Thank you so much for sponsoring the coverage, and go check them out. And come back tomorrow. I've got some amazing guests lined up of some billion-dollar European companies. So see you then.
My name is Orla Brown. I'm head of insights at Deal Room. This is the fourth time that we've been doing this event at SLUSH. So very happy to have lots of you back again. I know it's early. There is coffee, and there'll be time to grab it at the end as well. But thanks again for coming. We're going to start with a few of the insights from Lorenzo, who's going to present them. And then we've got two short and sharp but exceptional panels where we're going to be discussing some of the findings. So thank you very much for joining, and I'll hand over to you, Lorenzo.
Thanks, Orla. Hi all, thanks for being here and sorry for the early morning. So I'll be just taking a few minutes of your time presenting some insights from the European Deep Tech report. The full report will be out in Q1, but we just present some exclusive insights for SLUSH. And this is actually the 5th edition of this report, and the 4th time we do this at SLUSH. So it's becoming a tradition for the European Deep Tech ecosystem, and we hope it's gonna still provide value to all of you. But jumping in the insights, so first of all, let's look at what's happening outside deep tech, so what we call here regular tech. So VC funding is down 50+% from its peak in 2021, while when we look at deep tech, that's only down 10%. So overall, if we look at a few years picture, there's a lot more resilience in deep tech. And also when we look at pre-pandemic level, deep tech is around 2 times higher, while overall the rest of tech is more or less flat. So deep tech is definitely been growing faster in the last few years, more resilient. When we look just year over year, from last year, both are actually up 16%. In the regular tech, we've seen, of course, a lot of impact of AI, but also some comeback of fintech, which was really, down for a few years, and now a few rounds came in, Revolut, FNZ, Rapid. So, a bit also on the rest of tech, we've seen the momentum picking a bit up in Europe. When we look at how much of the funding, of the total funding in Europe goes to deep tech, in the last 3 years has been around 30%, which is 2 times higher than a decade ago, and also quite higher than any year until 2022. So it's the last few years really deep tech has been making a much larger share of the overall funding in Europe. And this is not unique to Europe, however. It's been happening all over the world. So particularly striking for me is the case of China. Back in 2015 to 2018, deep tech was less than 10% in China. There was a lot of marketplaces, a lot of fintech, a lot of ed tech, and then that started to shift rapidly to 34-40% in the last few years. And a lot of that is semiconductors, robotics space. And also the US was around 20% for a few years. And then the last 2-3 years it jumped up. A lot of that is foundational AI model that we'll discuss later, but still pretty striking. When we look at what kind of value has been created in Europe by these deep tech companies, there's been already 95 of what we call kind of outlier outcome successes. This includes companies that are unicorn, 1 billion exit, but also thoroughbreds, which means company that achieve 100 million plus revenues. Those are often, at 1 billion plus valuation, but not always for a few reasons. So across these 95 outcomes, and another 141 between 25 million and 100 million of revenue. And then, of course, there's a large pool of earlier stage companies, like 7,600 more or less, that can still convert to that kind of outcome. It's also quite, in last year report, we also spotlighted how actually the passage between 25 and 100 million revenue is sometimes quite fast in deep tech, while to get to that level it takes a bit more, because that's typically when you have really large scale plant or your product is getting to scale. When we look at how much value then these companies have created, we are at around 737 billion in this year. This is, more than twice what it was in 2020, and most of that is still private. So that means, there's still room to grow. So, quite significant. Of course, when we compare internationally, there's still a need to accelerate this value creation. If we compare to something like SpaceX in the US, that's around half of that 737 billion. So, there's still something that Europe needs to go to really accelerate to these big outcomes. And then looking specifically at what segments are the most funded and the one picking up the most momentum, we focus here on what we call novel deep tech segments. So these are some particular area of interest for us, including novel AI, future of computing, resilience, computational biology, space, novel energy, and novel robotics. And these areas are growing a lot faster than overall deep tech. Already 9.4 billion this year, which is up like 300% from 2020, and significantly more already than last year. And when we see which of these have been having the most momentum, definitely novel AI, led by foundational AI model like Mistral, but also Synthesia. Future of computing, a lot of quantum, really like a standout year for quantum, both in funding, exits, and milestones, technical and commercial. So big rounds include Quantinum, EQM, multiverse computing, and then resilience, the defense side. There, of course, a newer area, but growing really fast, with Helsinki and quantum system as the biggest round. And computational biology, that is the second red there. It's actually interesting case of a bit of a comeback in one sense. It was pretty big. There was a pretty big wave in 2021, then a bit of downturn, and then it's picking up again with the new advances in AI. And when we look specifically at resilience tech, splitting it out, of course, we see very strong growth. There was pretty much nothing until 2022. And then, that really picked up, and it's almost still doubling year on year from last year. And the topics vary a bit. We have hyper defense, we have drones, we have air and missile defense system, ground vehicles. So it's not only one segment inside resilience. Of course, it's a very active market at all stages. We also see the blue portion at the bottom. Those are also growing. So it's not just big rounds. It's also early stage innovation that's picking up the pace. And of course, the question that many have is, how much of these trends are driven by AI? How much is the impact of AI on deep tech specifically? So in here we show what share of deep tech is related to AI, and I need to explain a bit what that means. So in here we include foundational AI models and other innovation on the algorithm side and model side. We include application of AI in deep tech, something like AI drug discovery, autonomous driving, but not something like Lovable or just SaaS with AI. And we also include the specialized chip or photonics specifically for AI. If we look at all of this, then it's over 50% this year. And that was nearly twice what was historically. So AI is making quite a big portion now of deep tech in Europe, but this is still less extreme than in the US. And the graph I showed a bit earlier, with the US ramping up in deep tech, a lot of that is really focused on AI, 86% this year compared to Europe at 53%, which is in line with the rest of the world. So this is, everyone is racing to AI, but the US is doing it in a more really extreme way. And in fact, when we see the gap between the Europe and the US, that gap is like very big in the AI portion of deep tech, like over 12 times more. While in the rest of deep tech, that's like 2 times gap. So it's a bit more balanced view. And of course, this is a story of quite some, very skewed by some concentrated bets. So in this chart, the red portion that you see is the very large rounds. And you see that in the US, looking at AI per deep tech intersection, that's been ramping up massively in the last 3 years, reaching 90% this year. So it means, all of this money are really going into a few companies, OpenAI, Anthropic, say, Superintelligence, and so on. While in Europe, we see a bit less of this. So, the numbers before are really skewed from some of these really, really big financings. When we exclude that, we still see the US taking a bit of these bigger, more concentrated bets, but it's a bit less extreme. So it's around 56%. Still, striking difference to Europe, where that's less than 20%. This very big, above 250 million, but it looks less, kind of extreme than the other one. And when we compare by stages, we also see this, of course. Like Europe kind of, competes well at the early stage. Breakout stage, we start to see some gap, but the late stage, above 100 million, is really where, there's most of the difference with the US. Of course, a lot of that in the first two rows where there's CI, but also in, the rest of deep tech, we still see quite a big gap when we go to those very, very big rounds. So then, what kind of impact and relation that has to what we call conversion rates, so meaning when companies go from one stage to the other, we see that Europe tends to convert a bit less across the stages, especially when you go to the very late stage outcomes. And this looks worse than it is, in my opinion, because, of course, if you take an approach of more concentrated bets, bigger funding rounds, bigger valuation, you have a bit of more conversion from seed to Series A to later outcomes, and you need to have that to justify the kind of investment that you're doing. So it's a bit of more of a setup of the ecosystem, with Europe spreading a bit more out the bets at the early stage and not betting that big and that extremely on some companies, while the US, especially in deep tech, has some very large financing right away, and then these companies tend to have more concentrated bets and deploy a bit more to the later stages. So that was the quick overview for today, not to steal too much of your time. You can pre-register for the full report. That's going to come out in a few months. And then I'm going to leave space to the panel to discuss these insights a bit more.
Thank you very much, Lorenzo. And so without further ado then, let's get some insights from some top investors in deep tech. Can I invite my panel up to the stage, please? So we've got Simon King from Lakestar. Lakestar we've been working with for a few years on this edition of the report, along with Walden Catalyst. And then Sander Verbrugge from NATO Innovation Fund, who we also work with on a lot of defense-related and resilience-related insights, and Benedict von Schurler from V Squared. So welcome all. But yeah, I'm curious, first of all, maybe Simon, because we've been working with you for a long time, how does these insights chime with what you see in the market? And maybe also, how have things changed in the last few years since we've been doing this report as well?
Yeah, of course. So I think for many people in the ecosystem, a lot of the data up there is not going to be surprising to them, right? AI is really big. Resilience and defense is increasingly there's a lot more focus on it than there was 5 years ago, obviously. And I think for me, having been a deep tech investor for the last 15 years, it's just fantastic to see the momentum, right? The proportion of funding that's going into it, the kind of growth in absolute funding going through all of the deep tech companies. So it's very exciting. I would say I still feel very excited about what the future holds, because we're still, even though we've seen the progress, we're still at the beginning of this journey. Fantastic to see 750 billion worth of value in European deep tech companies, but Nvidia's market cap is 5 trillion, right? And that's a single company. So we've still got some way to go, I would say. And I think, we'll explore some of the reasons why we're not quite there yet. But yeah, I'm, over the last 5 years, feeling the momentum in deep tech kind of building. I'm super excited about where it's going to go.
And maybe similar question for you guys as well. How have things changed in the last few years? Benedict, you guys launched in 2020. Does the investor landscape feel more competitive now? Is it busy? Are people getting more excited about deep tech? How does it feel?
Yeah, I mean, things have changed tremendously when we started out, and I worked in deep tech before that. I still remember vividly when we discussed whether the term deep tech is actually makes sense, or people actually can imagine what that should actually mean. So things have changed tremendously. Yes, there are a lot more players in there. I'm not sure whether crowded is the actual right terminology. I think we're really welcoming still every single player in the market to spur on the momentum together. We're still lacking significant capital in the later stages. We have more in the earlier stages. We have more and more people that understand deep tech, understand the technical risks associated with it, understand the different business models compared to sort of shallow tech. So I think, to echo what you said, Simon, it's very exciting. It's all moving in the right direction, but still a long way to go.
And you mentioned that sort of deep tech is a relatively new term, but dual use is also one of the things that's sort of thrown around as well. And I saw at SLUSH last year, the founder of ISI said everything that's deep tech is dual use and everything that's dual use is deep tech. Is that how you see things as well, Sander? And do you think that kind of realization has helped more generalist VCs come into deep tech and into dual use?
Yeah, thanks for that. Well, it's actually a few questions, but first of all, I really don't like the term dual use, although we're all using it, and me myself as well. I think defense industry is simply another industry, and I think for every startup it's good to diversify your product or technology into multiple markets, because if one doesn't work or is a bit slow or sluggish on uptake, you can move to the other ones, and it just makes you more resilient, no pun intended, as a company. If I do, however, use the term dual use, yes, I think a lot of deep tech can be adopted for defense or security purposes as well. Not all of them, though. So the combination is not one-to-one. What I really do like, because you see the ecosystem of deep tech, as alluded both by Simon and Benedict, picking up, I do feel that these type of investors really understand the type of innovation that is also needed for defense tech, because it's also hardware-based quite often, or software strongly coupled to hardware, which typically holds for deep tech as well. So these type of investors can really move towards the dual use space and the resilient space quite easily, and I think that's part of the reasons why you see this huge uptick in the amount of investments happening in the past 2 years. So if we do use the terminology, then I'm happy that we now have these insightful investors that are willing to take the long term, understand hardware together with software, and are willing to make bets there.
And I think we need to talk about AI being the elephant in the room. 53% of deep tech funding now is AI in Europe. Is that a risk? Are we at risk of having sort of tunnel vision or bubble vision around AI? And I'm interested in how you guys feel about that, but maybe you first, Simon.
Yeah, sure. Again, I don't think it's surprising. Actually, I was surprised to see the numbers written down. I think everybody feels it, right? You know, AI is a topic that everybody's talking about. It's all over the news. It's in every company. No, I don't think it's a bad thing, right? I think when Steam came along, right, everybody was backing Steam-based companies that were using AI is the new kind of technology that's going to power the next industrial revolution in my mind. So, no, I don't think it's a bad thing that people are focusing on it. There's a lot of talk about the bubble at the moment. We can debate that backwards and forwards, but no, frankly, there are companies out there making good revenues selling AI products. And I think that's where we're going to see the focus of investment over the next decade. Absolutely.
You're nodding as well, Benedict. How do you see it? Are there areas that we could be sort of missing to invest because all eyes are on AI?
Well, I'm nodding, and I think the numbers were actually quite encouraging with regards to Europe. That our sort of take on AI is actually on much broader footing than the US. And yes, there's a lot more investment in the US, and yes, LLMs are well, as the name says, foundational to AI as such. However, when we talk about sort of bubbly tendencies, I think that would be an area where I would look first. So overall, I think Europe is on a right track, actually embracing AI and bringing it or connecting it to the physical world. So yes, I mean, absolutely, we need to look at that. We need to invest in that, and but take a holistic view, and Europe is on a good path there.
And Sander, we saw, we're also seeing in the data a big spike for investment in resilience and the area of resilience. it's grown a lot from a low base. From your position, is it enough still yet, or do we still need to be putting more into that space?
Well, I think if you have a heart for the system, you always want more money in. I think if you're one of the VCs, you want it to be balanced so you can really get all the good deals. But if we look at 2029, because there's been a huge pledge by all the NATO allies to commit more of their budgets to spending, there's going to be about 200 billion euros to spend on the armed forces in general. I think we as an ecosystem should really strive to make sure that a large part of that spending goes into innovative new products. And if you look at it from that perspective, I think the 1.3 was on the screen just before. I think that's not going to cut it. So I do feel that there's a lot of investment opportunity out there, and I would like to urge all the fund managers that are here to dive in and see if there's good companies there. Talking bubbles, AI, I do see that the defense valuations are going up significantly. So we can also say there might be a shortage of great founders that are coming up with these innovative startups. So to all the people in the room that have ideas to move into that space with their technology, their product, I would really like to urge them to see if there are options there to move into that space as well. And really capture a significant part of that 200 billion, which is an annual spend in 2029. So the market is going to be there. It's already here because many countries are spending this year already. So I think it's a great opportunity for all of us, and I would like to urge everyone to be part of it in a controlled and intelligent manner. Otherwise, we're just creating fluff or well, we need tangible proof points to have an actual deterrent force as allied nations.
One of the other striking things for me from the slides was the gap still, the gulf between Europe and the US. I'm wondering, what do you think are the biggest blockers for kind of European supremacy, if that's the aim in deep tech? And maybe it's from like a portfolio. What are some of the blockers from some of your portfolio companies? Perhaps, Benedict, you can speak to that gap.
Thanks. I think that's a very, very relevant question. And I don't believe the answer is sort of lack of talent or lack of great companies. Rather the contrary. It's more fragmentation. It's more of national views and not thinking on European scale. And first and foremost, the capital markets, fragmented capital markets. So every really strong deep tech company looking to IPO is considering NASDAQ or is considering the US. I mean, and that doesn't need to be that way, but it is, and it will be the case for the foreseeable future. So whenever you're really going on a large scale or global scale, there is US money involved, or you need US money still. And things are improving, but still at a very low level. So I think that's the biggest showstopper as of today.
And you guys agree, or are there other things you'd put on the wish list?
No, I think capital gap is a big part of it, right? And it's not just the public markets, private markets as well. You know, if you've got a company that wants to raise 50 to 100 million or 100 million plus in Europe, there aren't European funds that are going to be able to step in and lead that. So you've got to look outside. And for some companies, you can do that. But for others, it's trickier, right? I remember 2021, we were going out to raise 60 million for wave optics. And really, you know, when we got an offer from Snap to acquire the business, debating whether we could go out and raise $60 million, you know, essentially made the decision for us. I would love to live in a world where you can absolutely say no to those acquisitions and move on. And I think we're getting there, right? You saw Synthesia turn down $3 billion by Adobe recently. You know, that's the world I want to live in, where we've got European entrepreneurs who have the ambition, right, and can make that call, knowing that actually we'll be able to raise the capital we need to build a massive business in Europe. Sorry.
I would like to bring a small nuance to this, because I think if you look at Europe as a whole, I do feel that there's mature ecosystems that are doing quite well, and they're definitely part of this exponential growth. There's also definitely still countries where the VC ecosystem is a little bit more nascent and needs to grow. And I think there are still quite of the traditional hurdles. So bringing IP out of a university or a high-quality national research lab into a startup is still a hurdle. There's still regulation out there that doesn't help. And I think if we want to be able to compare Europe to the US, which was done in this presentation, we always factor in the whole of Europe, but from a VC perspective, actually only a few parts are really contributing heavily. So if we want to make use of all this talent throughout Europe, all this beautiful research being done throughout Europe at all the great universities that we have here, there is still some work to be done in multiple countries to really get that to an elevated level. And I know that the funds on stage today and later as well, they would love to invest throughout Europe and get all this talent, all these beautiful IP into the market and make it into a valuable company. So that's the nuance I would like to bring, but otherwise, fully agree.
I was going to ask about location actually as well, because so Benedict, you guys are based in Munich, amazing deep tech hub, but you are also increasingly investing outside of Germany. Where in Europe or in the rest of the world is particularly exciting for you in terms of hubs at the moment?
Well, I mean, we started out in Munich, but this was more coincidence. And yes, it has grown into a great hub. But I mean, fundamentally, we're going where we believe the best talent sits and the best technology is being sort of built. So we have no. I mean, ideally, we don't have any location bias, but there is we sort of a strong pull from the best technical universities across Europe, I'd say. So TU Munich obviously is one of those, but then just in Germany you go to Aachen, and then you go to ETH Zurich, and then you start venturing out to Aalto University here in Helsinki is fantastic, with several investments here in Finland as well. So it's we look across Europe. And I think the technical universities are doing a great job more and more, and actually also bringing or enabling an early conversation. So the more that happens, the more we will go European, and maybe the less red tape there is in moving from country to country that would enable that as well. We've just been through an investment in Hungary, our very first one, and that actually was still a little sobering experience in terms of sort of additional admin and red tape there was. Everybody with good intentions, but there's still a lot of hurdles. So yeah, I mean, there's no strategy behind it other than looking out for the best tech talent in Europe.
We do actually have a report on spin-outs and on universities coming out tomorrow as well. So if you're interested, you should take a look at that. But I'm interested in the universities piece actually, because that's where you were saying you kind of focus. How is it working with the universities? Have things improved in terms of the sort of IP transfer and just dealing with tech transfer offices in the last few years? Because there's a lot of sort of horror stories that you hear as well.
Yeah, I mean, it's definitely getting better, right? But slowly, I would say. Many of these institutions are hundreds, if not thousands of years old, and they move at a kind of pace commensurate with their age, unfortunately. So we're definitely seeing improvements, but I would say it's quite university specific. So there's increasing awareness. There are increasing kind of numbers of guidelines and kind of best practice that's being shared out there, but the adoption rates are pretty hit and miss. I mean, for me, it's not just, everybody talks about equity stakes and kind of incentivizing your founding teams, but for me, it's also just the pace at which the universities can move. If you've got a new technology, it wants to be out there, and the entrepreneurs want to get it out there in the market as quickly as possible. And if you're having to deal with, 2 years worth of IP wrangling with a legal department in a university, all the momentum drops out of that. So I'd love to see more kind of just a bit like Zurich's doing, like MIT and other places have done. Like, here's the deal, you can take it or leave it. But if you take it, you're out straight away and off you go.
Speaking of pace of movement, Sander, you guys have to wrangle 24 countries and 32 member states, I think. And yet you still also need to be able to have pace of deployment and work at startup speed. I'm curious how you manage that and how you approach that.
So first of all, I'm 2.5 months in, so I'm not sure how we actually deal with it fully. But let me give, first of all, I think most funds here do have 24 LPs or even more. So from that perspective, we're not that different. However, it originated out of NATO. So there's 24 allies out of 32 that decided to invest in us. But they did make the purpose decision to make us a separate, self-sufficient fund that can make decisions to invest at our own decision. So we have our own IC, and there the decision power lies. So I think we can move with other funds. We have a little bit more things we need to check on in the due diligence. For instance, adversary capital is simply not allowed in the companies that we invest in. Potential adversary influence is not allowed in the type of companies we invest in. But coming back to the LPs, I'm actually quite happy that we have these engaged member states, because they're actually helping us. They are the potential customers or portfolio companies. They're allowing us in. They're a radar function into the regions where we are looking to invest in. So we can work with them well. And it's not always easy, because they have their own interests as well. And then they clearly tell us, as most LPs do. And we have, besides only a financial target, we also have an adoption target to bring actual viable technology towards the ministries of defense. So that makes the fund and our decision a little bit more complicated than just financial return. But it also makes our work more impactful. So I truly enjoy that. And we'll work the boundary conditions, and we'll try to work with all the good fund managers out here to do great deals and find great companies. And our LPs are supportive of that and actually trying to help us with that as well.
Nice. I'm now very conscious of time, because I did promise a couple of short panels. So I'm going to go to the last question for all of you, same one for all of you. What area of deep tech are you guys most excited about at the moment? And what are we likely to start seeing growing in the charts in the report in 2-3 years' time? Maybe we can start with you, Simon.
Sure. I mean, for me, it's future of compute, which it covers a really wide range. So within future of compute, I think it's the neuromorphic and photonic approaches to computing. So we're clearly hitting kind of the limits of Moore's law, and the requirements for compute in AI is growing kind of exponentially. And so there's a bunch of technical bottlenecks in there where we have to solve those challenges. And I think it's not clear, as risk-averse as the semiconductor industry is, right? They can't just keep doing what they're doing and hope that it's going to continue to improve. So, yeah, there's a couple of areas that I'm super excited about there.
Benedict?
I think that's a really hard question, because I'm also quite excited about everything, and ultimately I just hope that all of these bars will grow tremendously, and so that this size will be thrown off the chart in a few years' time. No, but I mean, ultimately the future is super bright, and I think connecting what we said earlier, sort of AI to the physical world will be a dominant theme for the future, and it's even hard to imagine still what's out there, but it's going to be exciting.
Nice. And Sander?
Yeah, I fully support what I said. I also love novel compute in any way they can get it done. But maybe specifically, it's not going to be on there because it's small. But I think there's some work to be done on novel communication technologies, either being photonics based or still in the EM spectrum, but maybe moving up there. Because we see some indications that jamming is becoming a serious issue for defense tech. But I also feel that just higher bandwidth, moving to 6G, as a society, is something that we need to start thinking about and investing in. And it could well be that novel technologies out of VC startups can make a difference there, just like Qualcomm did back in the days before the 2000s. So I'm really excited about that. Whether it will be a separate category in your deal report in the coming years, I don't think so. It's a smaller niche, but I'm quite excited about that. And I do think Europe, from a research and industry perspective, is quite well positioned in that space to do some really nice things and build some really great companies.
Very cool. All right. Well, thank you very much to this panel. We're going to go straight on to the next one, which is going to be hosted by Seb Johnson. But first of all, thanks to all of these guys.
Hello. I'm Seb Johnson from Scaling Media, and I'm going to be joined by Suzanne and Devika, two leading investors from across the European deep tech. There we go. From across the European deep tech ecosystem, we're going to be talking about whether or not Europe can lead the next wave of deep tech. And so thank you both for joining me. How are we doing today?
Great.
Yeah?
Good. It's actually not that cold.
Yeah. Well, look, Devika, I want to start with you. You are backing, supporting, investing in European scientific founders at the earliest possible stages. So when we talk about the next wave of deep tech, what are we talking about? What is that next wave?
So I think the panel earlier touched upon a lot of the things, but if we saw software eating the world to date, I think we're going to see a lot of science rewriting the world. So everything that touches the physical world in AI, which was alluded to already, is incredibly exciting and is already being built and scaled. So from sandblasting robots, which was a company that I just spoke with this week, to fusion reactors, and even to technologies in biodefense, which is going to be quite exciting. So I hope we increasingly see deep tech becoming the operating system for the economy.
Amazing, thank you. And the question itself is framed in a way, and the report suggests as well, that Europe is definitely not leading the way in the current deep tech wave. So a question for you, Suzanne, is how have we got to this point? There was a huge industrial manufacturing industry, scientific industry here in Europe for such a long time. What has prevented Europe from leading the current wave?
Wow, I'm not a philosopher. I look at it in a bit different way, and I think it was alluded, right? Deep tech is a broad field, and I think we still certainly have the talent and the skills and the qualities from science and research to lead in certain ways or to build great businesses, because it's not about simply supremacy or leadership, these abstract definitions. But what it is all about, and why Europe has been successful in the past, is because, they were building successful businesses serving the world with products and services. And I think that's the defining moment of deep tech. Do we get, these small plants that we're seeding now and that we're, growing? Are we managing and supporting them in the right way from a capital market perspective, and also from a leadership perspective, to become global players in their applications or in their fields? So I think that's more the question for me. So I'm looking forward, and I'm optimistic in some of the areas. And I think as Amadeus in our early stage fund, so just as background, we have early stage strategies and growth strategies, so both. Our early stage funds really have invested in businesses that have become global leaders in their field. That ranges from company in AI, and we have done some pretty significant rounds, over 50 million. So I think that also demonstrates that we can lead rounds, but we can also syndicate rounds. Maybe we can come to this topic later. But we also have exited businesses. I have one from, which is not defined necessarily in deep tech, but which was, something in the medtech arena. We just exited Organox, a 1.5 billion exit to a Japanese company, which is probably one of the largest university spin-offs of all times in Europe. And it's a tangible business with hundreds of millions of revenues that was exited. And obviously it took some time to build it, but I think that shows that you can. And in our history, we have IPO'd 17 companies. So I think that clearly shows that you can create value, based or in companies based out of Europe. But of course, they become global players. They don't only stay in Europe.
Yeah, and the Organox example is an amazing example of a great deep tech company that did have a phenomenal exit. I think it was acquired for over $1 billion. I think it was acquired by a Japanese company, is that right? That kind of follows a trend that actually we're seeing, that once we grow European companies, we hit scale, and then they can often get acquired. And I think ABB is a great and amazing robotics company that was acquired, I think, for about $5 billion by SoftBank Group. Do you see it as an issue or a problem that a lot of our deep tech companies are hitting scale and then being acquired by non-European companies?
Yeah, happy to answer. So again, we had also a couple of IPOs on Nasdaq. Yeah. So those are obviously standalone companies, and I think we will see a couple of more from the portfolio. I think in ABB is they essentially spun off that robotics business of theirs, gave it into other hands, which maybe it was the right decision for the ABB shareholders to create short-term value, I think, but it also shows sometimes the desperation of European corporates, right? if they feel that, for being successful, for example, in robotics in the future, you don't only have the hardware robotics aspect, right? You have the AI, the software, the system aspect. And they obviously feel that they don't have access to talent or access to skill in Europe where they are based. Or maybe they should think differently and say, okay, what's a radical approach to that? Where do I have to be present? Where do I have to access, innovation and innovative companies and build that expertise in-house? So I think there we see, US established players being much more aggressive, in acquiring talent, acquiring innovative companies, while, some of the European players still think, made in-house is better. So, for me, it's really, Europe shouldn't always complain and compare themselves to US, but they should really think about how can I lead the way for also as a strategic, as a big corporate in in Europe.
Yeah, I'd echo some of that. So long as we don't have mature enough capital and customer markets at the later stages, we're always going to see companies moving over as early as a Series A to the US or other regions as well. I think when it comes to sovereign technologies and the whole area of resilience, which frankly covers a lot of deep tech, we should be looking at preventing this as much as possible. So if we create the right conditions for founders and entrepreneurs to be able to build massive companies, which are being started here, but also to be scaled here, then obviously the situation would be very, very different.
And when we talk about sovereignty, resilience, we get different motivations and desires coming in. It's no longer just about free market capitalism and returns to investors. We're also seeing the role of governments and states taking an active stake in deep tech. We've seen the US government take a 10% stake in Intel. They've set up this revenue sharing model with NVIDIA. What role do you both see or what role do you think European governments should play in either promoting deep tech companies and industries or protecting our sovereignty and resilience?
So I think that Europe already has quite a heavy state funding model in deep tech. So at the earliest of stages, which is where we operate, there's huge amounts being poured into grant funding into companies that haven't even raised private capital as yet, with initiatives like the EIC Accelerator. And then you have a lot of VC funds that are anchored by public LPs. And then, of course, my favorite topic, you have tech transfer offices that still take double-digit equity stakes even before a company has even met a customer. So if you were to say, should the state now start, firstly, what is the state in Europe? But should the state now start taking equity stakes in important companies, then perhaps that's going to lead to more distortion and less market discipline. And we need perhaps more of that in Europe. But yes, when it comes to, critical industries, then the US playbook is a relevant one to look at. So can governments here be a strategic co-investor? Can they be a procurer? I think that's a really important thing to consider. And I think we're seeing it, but perhaps not at the scale and in the mechanisms that warrant good quality outcomes.
Amazing. What about you, Susanne?
Yeah, I would say, to the governments or to the countries in Europe, just be a large and good customer. That would help a lot. I think that's truly my answer to that, because I think it's, the US government and various, especially when it comes to technology, sovereignty and resilience, just being a good and reliable customer. And not just a non-recurring engineering project customer. I think that's really be a viable business partner for companies.
And do you think that?
Can I just say one more word, because I think Benedict, Sander, and Simon alluded to that. I think it starts already in the early stages, right? When we put syndicates together. And we will have more and more capital requirements funding those deep tech businesses, right? Really large rounds. So I think to the VCs and also to the founders, right? When you build your syndicate, go away from that nationalism to that local, investors. Oh, and then, we're in Series B and finally we're waking up and we need more capital from other countries. So you can actually start already in Europe building good across European VC syndicates and, even better, bring in investors that have good networks into your future customer base, bring them on early enough. Yeah, I think plan ahead, be proactive, and don't wait, for your big capital requirement and then, where can we look for capital in the US? So start really building these syndicates early enough. I think that's what also founders, entrepreneurs, but also VCs, I think still have to adopt more.
Got it. And, talking about capital is obviously a huge gap. I think, it looks like the US spends 15 to 20 times on deep tech than Europe does. How can we change that? Like, what do we need to prove? What do we need to do to get more money from Europeans spent on European tech companies?
I'll probably switch it a bit. I think there is a lot of early stage capital in Europe, but certainly given the nascent stage we're at as a whole as the ecosystem, there should be more across the board. I think there could be things that we should not be doing. So I think there's a big need for a greater sense of urgency and conviction from all stakeholders on the funding side when you're backing entrepreneurs and founders. So, as investors, how can, there's still pre-seed investors and perhaps even later, it's, I guess, more valuable at the pre-seed stage that take months before answering a founder on whether it's a yes or a no. It still takes months to license equity and IP from a university spin out. So how do we kind of shift some of these priorities so that we can move with the same urgency as entrepreneurs as well? And I think if we do that, we will start to also see bigger ambitions in terms of fund managers raising the funds that they need to in order to back companies, doubling down on investments, and more late stage funds being started here as well.
What about you, Suzanne?
I think, again, I think most of the, deep tech ecosystems throughout Europe are pretty well financed. I think there is, Benedict was very polite in saying, we're still welcoming new players. A lot of them play, though, in the early stage. And I think that is also like a fragmentation, even though I think it's always also good in deep tech to add players with domain expertise and, again, networks, also industrial networks that help and support startups. I think we really still have a gap on the growth stage. And it's a little bit of a paradigm because we have not a lot of European-based growth investors. So how do we get there, right? Because you're not just starting a growth fund, because you also need investors to invest in your growth fund, and that usually comes with a track record. And since we don't have a very long history of deep tech investing in Europe, that's not so easy to do. So I think we see now in the early stages, more funds, larger sizes. We still have not enough growth funds from Europe. So, again, entrepreneurs have to go to other areas of the world to, acquire the financing.
And that gap at the growth stage is massive. We've also heard about, the lack of exit opportunities, capital market opportunities, the fragmented ecosystem across Europe. There's lots of issues and problems that kind of plague both European tech and specifically European deep tech. Where's Europe winning? What are the key strengths that we should be relying on, that deep tech should be relying on to get European deep tech to lead the world? And I'll start with you, Devika.
I think our competitive edge really lies in our scientific talent and engineering talent base, as well as research. It's phenomenal. And we see researchers, I think we train probably 1,000 researchers a year across Europe and parts of the US as well. And I think the beautiful thing about the space of science is that talent moves across borders. I don't think they see that. So you see very good talent having trained in the US, having done their PhD, and then they move over for their postdoc in the US, which is where they decide to Europe, and that's where they decide to build a company. And some of the best founders are able to also attract talent from around the world as well when they're building these. So I think that's a real edge that we have. And deep tech is an edge for Europe because of that and because of the institutional base that we have, and a lot of investors. I'd say the caliber of investors in deep tech is very good.
And what about you, Suzanne?
Yeah, I think I would fully agree with that. I think also that we always measure in terms of size, funding sizes, but then we also see times of where bubbles may burst or markets consolidate and become more rational. So I think we traditionally have been here. The companies have been also very capital efficient. And they were still successful, at least some of them. So I think that can actually turn out to be a strength. So that discipline and that resilience and that strength, I think that's something we need to combine with more agility and more forward-looking actions, both from investors and management teams of our companies.
More optimism.
More optimism. Yeah, and I think that's definitely changing across Europe. And one of the interesting trends that we're seeing is, people talk about how everything is becoming AI. Every tech company is becoming an AI company. We're also seeing this trend of all VCs becoming deep tech VCs to an extent. Like everybody now wants to play in this field, wants to have investments within AI, deep tech. You both work in very specialized investment firms, which are renowned for deep tech specifically. What's your view on non-deep tech firms that have traditionally been generalists in their nature now going after deep tech? Do you think that's a good thing for the ecosystem to get more money flowing into the hands of great founders, or do you think there are risks there? I'll start with you.
I think honestly on the I think you called it breakout or scale up stage. I think there is no risk in having more investors being in the mix. I think it's also not about necessarily like writing the biggest check in a round. I think you can also lead around and be very active and present on the board and help and steer the company forward if you don't write the biggest check. So I think for me, it's good to have, as an investor, obviously domain expertise, especially in the earlier stages. I think after that, it's really about network. It's about networks in the industrial domains that the company is playing in. And that's international networks. I think it's strong networks that you need to bring as an investor on, syndicating follow-on rounds. So having really access to the deep equity pockets that are usually not in Europe, but outside Europe. I think that's the second point. And the third point is have to also a clear path to exit. So knowing who you are trade sailing or where you are IPOing and having experience with this. And, as long as you bring those capabilities to the table, I think you're qualified to invest in a round, no matter if you call yourself a deep tech investor or generalist investor.
And are you seeing something at the very early stage? You support scientific founders at the very, very earliest stage. Are you seeing them get more interests from more traditionally generalist firms?
Definitely, and I also think that generalist firms tend to move a lot faster. And of course, there's a big trend in emerging managers of solo funds and things like that, and micro funds. They work really hard. We're a micro VC too, work really hard in order to provide the networks for our founders so that we can make sure we can bring, a great syndicate of investors together and relevant stakeholders so that the founders can move with speed. So I think at the very, very early stage, being generalist or not doesn't really, it's always ideal to have one that has some domain expertise, but frankly, it's hard to have deep domain expertise across the spectrum of deep tech in a fund. Very hard. Only a few firms can probably afford that. And you just need to be a really great investor that has the best interests of the founders and allows them to do their best work.
Amazing. Well, look, running out of time, I want to ask one final question, the same question of each of you. you can change one thing across the European deep tech ecosystem. It can be capital markets, the fragmentation of markets. It can be policy changes, regulation. What is the one thing that you would change that you think would help Europe lead the next wave of deep tech? I'll start with you, Suzanne.
Everyone just being focused on business and not on politics.
I like that. One, I'd say, make it impossible for universities to take more than single-digit equity stakes in. I think the word for impossible would be illegal for universities to take more than single-digit equity stakes within companies. I don't think we need to reinvent the wheel there. I think Simon mentioned it. ETH is already doing it. Universities in the US, plenty of them are doing it, and to do it with speed. If I would add a bonus one, and because this is something that we think about sometimes, is how do we, where are the billionaires in Europe, and why aren't they contributing to scientific research and development as well? So, the Carnegies and the Gates and the Schmidts. I mean, one of our first grants was from Eric Schmidt's foundation as well. How do we incentivize, private wealth, which is a lot in Europe, into areas of deep tech at the earliest of stages? We have donor-advised funds in the US. What would the equivalent look like in Europe?
Yeah, that's super interesting. Jeff Bezos' new $6 billion Prometheus project.
Who starts a company with $6 billion?
Yeah.
It's a pre-seed.
Pre-seed, $6 billion pre-seed. Well, look, thank you both so much for joining me. It's been great.
Thank you. Thank you so much, guys. Amazing insights. Thank you all again so much for coming so early. We're going to wrap it up there so that you still have a little bit of time to network and grab some breakfast before the rest of your day. And I hope you have a great rest of your slush. Thank you very much.
That's a wrap for the day one Scaling Europe coverage here at SLUSH. Thank you so much for joining me. Come back tomorrow because we have got some amazing guests, the founders, CEOs of some European billion-dollar giants. So come back and, of course, shout out Harmonic and shout out Databricks. Check them out.